Okay, welcome everybody. Thank you for joining us at our first ever Contract Financing Assistance Program seminar, series day one with Meriwether Williams, and joined by Carolina Small Business. I'm gonna go over some guidelines for today's class and tomorrow as well. This is a more intimate session, so if you have any questions, feel free to either put it in the chat box or raise your hand, or just whenever there's a little break in between the presentation, feel free to chime in your questions. We appreciate anything that you throw at us. We're going to try our best to answer to the best of our abilities with the help of Robert, Janet, and the Carolina Small Business. So no further ado, I'm going to throw it off to Robert to get us started.
Good afternoon, everyone. Thank you for joining this. This is, like Jason said, is a very intimate session here. We intended for this to be very interactive, cameras on, mics on, so we can talk. This is informational, and it's going to be a lot of information that we're going to be sharing, but we want to make sure that you understand what this CFAP program is all about and how you can get started with it. So with that, we're going to go ahead and get started with some introductions here. So we're going to go to the next slide. And of course, you guys know me. I'll pass it on over to my colleague, Janet, so she can introduce herself.
Hi, everyone. My name is Janet Ramirez. I'm the contract-based financing analyst for our financing assistance program. I am the first interaction that you'll get if you're interested in just learning a little bit more about the program and then basically walk you through the whole process. And then our other colleague, John Miller, will be joining us tomorrow. But I'll hand it over to our partners at Carolina Small Business Development Fund. And Mark, I'll hand it over to you.
Oh, great. Mark Royster, and I've worked with Carolina Small Business Development Fund now for be my 7th year in April. And we are a small business lender throughout the state of North Carolina. And we are an SBA Community Advantage lender, but we're excited to be a part of this program where we're going to be the one that provides the money for loans that are approved and financing projects that are approved between the two partners, us and Meriwether and Williams. So excited to be here and excited to be here to support the program. And my colleague, Reggie Jones, my boss, he's here. He's going to talk next.
Yeah, right. Hey, good afternoon, good evening, rather, everyone. My name is Reggie Jones. I am the Business Solutions Director with Carolina Small Business Development Fund. As Mark said, we are a lender. We are what's called a CDFI, Community Development Financial Institution, specializing in lending, technical assistance to help you access capital and to be a sustainable business, and policy and research. So tracking the impact of the success of these businesses that we're lending to, so we can help policymakers and corporate leadership and municipalities make decisions that continue to favor small business, which funds the majority of our jobs here in North Carolina. So it's a pleasure to be with you guys today and learn more about this exciting program.
Great, thank you. So we're going to have the participants to do your introduction, your famous elevator pitch, so that our partners will know who you guys are. So since I have Melody up first, I'll let you go.
Hi, good evening, everybody. It's good to see some of you again and to meet those of you who are new to me. Thank you for your time tonight. My name is Melanie Garrett. I am a primary partner in Wolf and Raven Construction. We do the installation of water service delivery lines and various other related activities, land, the excavation as well that goes along with that. That's our primary focus at this time.
Great, thank you. Brian Harris.
Hi, everyone. I'm Brian Harris, co-owner along with my wife, Tina Harris of Harris Commercial Group. We are a commercial cleaning and post-construction cleanup company. We also do carpet cleaning and floor strip and wax, things like that. We've been in business for a little over 5 years and just really trying to break into the government contracting sector.
Yeah, great, thank you. Eduardo Stanley, you're up. Eduardo, if you unmute, please.
Hello, everyone. How are you doing today?
Doing great.
Eduardo Stanley here with Ease Exteriors. We specialize in exterior services ranging from roofing, siding, gutters, pressure washing, and landscaping. Looking to also cross over into more of the commercial and government contract opportunities through the program.
Great, great, thank you. So, okay, Janet, I'm gonna turn it over to you for a little bit. So some of you guys, understand, we do have other supports services within there, the bond support, we kind of talk about this, we're trying to get you guys ready to do business with Public Works. So, we're here to assist the contract to obtain or increase your bonding line of credit. So, you will work with your CDM, and then with CDM will be working with the sureties. If you don't have one, we can, introduce you to a surety broker. So it's all about building a relationship with your surety and your bonding companies there. We also can provide that collateral of 40% of your contract value or $250,000 to help you get that bond line to increase so you can get these jobs. And this is for city projects only at the moment here. So that's how that collateral work, so whichever one is less, 40% or 250,000. So the way that works is if you have a bond line of 500,000 and you're going after a job that's 800,000. So, we can utilize it 250,000 or 40% to whatever one to get you up to that bondable that you need. So this is, that's why we always want you guys to be ready to do business. So if you don't have your bond letter, your bondability letter, let's start working on that so you're ready when these opportunities come around. We also, if you have an existing broker, we can work with them to build a relationship. We can help you with your pre-qualification. There's a 2-page quick qualifier that you can use, and that's kind of based off of your personal credit score of 650. And if not, then we can go through the regular process of getting you pre-qualified. So like I said, let's work on that. That's one of the biggest KPIs that the city program is looking at. How many bonds do we have, and are the contractors using the bond? So that's a little bit about the bonding support. So the project funding support is what we're going to be discussing today. So instead of going through all that, you're going to get more detail with that as we go through the program. So if there's any questions, please feel free to ask us. Like I said, we do have our partners on here, so they will be able to answer questions as well. So Janet, let's get going here. We're going to turn it on over to our partners for a little bit.
So Mark or Reggie, if you just want to give expectations of what you guys look for in a borrower, as far as like Reggie, technical assistance, just anything that would kind of help the borrower to kind of move forward in any of the requirements that they need when it comes to potentially being a borrower with Carolina Small Business Development Fund.
Hey, why don't Mark will talk about the lending, and maybe I can chime in a bit on the technical assistance.
Yeah, sure. But first, as Robert and Janet and Meriwether and Williams have alluded to, this program is unique And we are a partner with the program on the bonding side and the contract finance side. Specific to the contract finance, as you saw on the previous slide, it's not specific to, we're not underwriting these and working with Meriwether and Williams and Charlotte from our typical underwriting perspective. What we're doing is looking at this on a project-based analysis, and we're excited to be able to do that. What we do in that part of the process with specific to the contract finance is once Meriwether and Williams and the team have determined that there is a viable project, and they'll work with you guys on cash flow. Once we get, and they'll talk more about that. Once we step in, they provide us with the information that they've collected on your behalf, the information they've helped you to work on when it comes to your cash flow requirements relative to the project. And what we do is we've agreed to provide the capital that funds that project-based analysis. Now, outside of that, we also offer your traditional financing needs. If you've got some needs for purchasing fixed assets, maybe vehicles, other types of fixed assets, what we're going to look for is your last few years of financial information, whether that be by tax returns and or financial statements. We do look, we're not a credit score lender, but we do look at an overall credit assessment of the owners, 20% or more. We do require anyone who owns 20% or more to offer a personal guarantee. What we also do is partner with the SBA, the Small Business Administration, to offer what they call the Community Advantage product. And that product allows us to loan small businesses in North Carolina up to $350,000, where the SBA will provide a loan guarantee when there might be a lack of collateral, when we might need a longer payment term. Generally, our loan repayment for our products goes up to 5 years. The SBA allows us to extend that to up to 10 years. We don't always require an equity injection, especially if you are a business that has a track record and history. Many times we may be able to finance up to 100% of your asset purchases. Try to be very flexible with that. In addition to what we're looking for when it comes to our traditional lending, we're looking for a personal financial statement of the owners, financial information on the business itself, and understanding your cash flow cycle. And many times, we know that contractors especially can have some difficulty in finding working capital for these projects, which is why we've partnered here, because we're excited, because that's not a product that we have traditionally in our wheelhouse with the lines of credit. So this will give us an opportunity to really support small businesses in North Carolina even more than what we've been able to do now. So that we're really excited about that. In addition to the lending, we do what Reggie will talk to now. We do a pre-loan and post-loan approach with some of our technical assistants. And so he'll talk to you a bit about that. But maybe before he goes there, are there any questions about what I've shared so far? And we'll share more, I'm sure, during the evening. Reggie, if you want to talk about a bit on that technical assistance side of what we do, that'd be great.
Thank you. Thank you. Yes. So, when we talk about technical assistance, there are two areas that Mark mentioned. It's pre-loan technical assistance and post-loan technical assistance. This program that, that we're talking about today this is innovation at its finest. It addresses many hurdles that we see in terms of access to capital and being able to manage capital to get through a project. So a lot of our technical assistance pre-loan has to do with helping you understand what the requirements are when it comes to submitting a loan request, the documents that are needed, why the documents are needed, and how our credit team would evaluate those documents. We feel like when you have that information, it helps you create understanding, right? It's not just a checklist. It's really understanding those documents and understanding how they're going to be evaluated. So we also do a business assessment that just, in which we learn about your business. We learn about, what it is that you're trying to do, what type of project you're trying to accomplish. And also to assess your capital readiness. So if you're ready for capital, we move forward. If we find that there are some areas that you may need assistance, we will connect you with one of our many resource partners in this entrepreneurial ecosystem that can provide that assistance and get you ready for capital. All throughout the process, we're educating and talking and helping you understand the process, setting expectations for what is next. In many cases, a lot of the businesses that we work with, this is their first time obtaining, small business capital. It is unlike applying for a credit card. It is unlike applying for a car loan. It's even unlike applying for a mortgage. For some of you homeowners out there, there's a lot of complexity, a lot of things that are part of the evaluation, and we want to make sure that you understand that and that you know why the questions are being asked, not just asking the questions. And then, if you are able to get capital, it's great, but what we find is that we want to make sure that we continue to have that relationship, and we're providing you the resources, connecting you with opportunities when we identify those opportunities, and any type of one-on-one advisory services or coaching or support you may need. Because it's one thing to provide the capital. It's another thing to execute strategies with that capital that lead towards your businesses being sustainable. So we want to make sure that we are available to you, and we continue to be a resource so you can help your business grow, scale, and perhaps even exit. Building wealth in your communities. Contributing to the communities in terms of tax revenue, and just overall having a positive impact on economic development in your communities. That part is just as important as the access to capital. So those are the two areas in which we really try to focus on delivering technical assistance and supporting our businesses in addition to the capital.
And I'll add that everything we do is designed, believe it or not, to essentially graduate you from what we do and connect you to your conventional banks. And as a CDFI, we get most all of our lending capital and technical assistance capital from partner banks throughout the state, where their lending guidelines may not align or are always aligned with regulatory guidance. We as a CDFI can sit outside of some of that federal regulatory guidance. Not that it's wrong, but it allows us to be a bit more creative. And so the banks count on us to help penetrate some of these markets that they're not able to, or maybe some are unwilling to, because of some of the credit risk they perceive. So what we do is we partner with them to try to figure out what we can do as an organization to help in funding some of those businesses that the bank's guidelines don't allow them to take on. But also our commitment is to educating small business owners and also trying to help them understand what banks are looking for relative to capital needs, and so we can prepare you for that process, which by the time you work with us and get ready and prepared, there's a lot less intimidation when it comes to sitting down with some of your commercial lenders. to Reggie's point, we take pride in being available to not just walk you through the process, but also to talk you through it and work you through it, answer your questions, which many times we see some of the bankers just don't have that same luxury to be able to do because they're so busy in trying to chase some other numbers and other things. So, but they're great partners for us. And so it does allow us to have a really good ecosystem here in North Carolina in transferring and helping each other to achieve goals. So that's one of our primary focuses, is trying to make sure that we can help small businesses navigate through this ecosystem and eventually get to a lending relationship with their primary bank.
Great. So I have a question, because I'll throw questions out here too. So do you have access to different grants and stuff that our contractors can also apply for that's, not loans and things like that? I mean, what other kind of services that, they can tap into with you?
Yeah, Robert, we do many times get asked by various organizations in the state to help in running some of the grant programs. We've had some in the past that were specific to, for instance, historically underutilized businesses, those that were registered with HUB. That allowed, and they were providing grants through that. We've got some municipalities that we've done grant programs for, and actually some municipalities, and even in Mecklenburg, that we run a separate loan program that Mecklenburg County, for instance, has said we want to be able to provide access to capital to our small businesses in the area. And so Mecklenburg has come to us and said, help us run this. We've got the money, but we don't have the infrastructure set up to be able to run the program that we want to run. And we've been running that program now 4 years.
At least
4 years. Yeah,
Mhm.
4 years. And we've actually seen that model, Robert, where other municipalities throughout the state now are looking at CDFIs like ours to help them run programs. So yes, there are many times that we do have grant programs and or local programs specific to certain geographies of North Carolina. So we always encourage small businesses to go to our website, get hooked up with our newsletters, stay in touch with us as we are getting information out. We have various events throughout the year. We were supposed to be doing for instance, a Black Entrepreneurship Celebration event tomorrow, but because of the inclement weather, we're changing that to a time in March. So we definitely encourage entrepreneurs, whether they're in the market for capital or not, to register, get into our website, look at the information. We have a virtual learning platform where we've got bank partners and other professionals throughout the state and country where our small businesses free of charge right now can go in and they can pull up information on QuickBooks, how to set up QuickBooks, how to develop a marketing plan. And these things are digitally available where an entrepreneur can go in and they can just do their own self-study and take those courses, which has been, and that's a library that continues to grow. So we do have various resources that where we try to make things very easy for our small businesses to have access. And for questions that can't be answered on the website, that's why we've got folks like Reggie and his team and other partners that we can try to link them up with. Reggie, did I miss anything there?
Fantastic job.
So I have a question to Mark or Reggie, either one. When you were talking about your funding with Mecklenburg County, is there any type of a CDBG program that is offered here in North Carolina?
Well, what I will kind of tell you what I know about CDBG in general. Generally, those funds go to a municipality in some cases, they could fund an intermediary to disperse those funds. And they take shape in a number of different, forms. I mean, it could be, like facade grants. I was on a economic development call earlier today, and they were talking about a number of different grant opportunities they have to, to kind of, upfit or to dress up, storefronts in downtown areas. So those funds are available, but I think that program funds a lot of different um, programs that are generally dispersed through municipalities or other organizations that they partner with. But I can't speak of anything specifically that we are currently involved with that involves those funds.
Yeah, nothing currently, Melanie. And for those who don't know, CDBG is the Community Development Block Grants. We've done some in the past. Our most recent activity, I think it would be down east after some of the flooding. And we had some CDBG money coming through Commerce at the time, but nothing that we're aware of right now with Mecklenburg.
That's fine. My familiarity with it is out of Northern California, and I saw that money do a lot of amazing things in small communities for specific projects, and it's always been dependent on what the municipality projects were. But whenever you mentioned, that you were asked to manage a program or administer a program or something, that just sparked that memory. And I was just curious what that was like here in North Carolina. So thank you.
Yeah, and Mecklenburg may have received some of their funding for some of the programs they're standing up now through CDBG. I'm not sure, but we're not doing anything directly for them on that front.
Great. Any other questions for Mark or?
Yeah, I have
Go ahead.
a couple of questions. One regarding Mecklenburg County. We recently bid on a job. We don't know if we'll get it or not, but one of the things we were looking for is funding for additional equipment for that job. It's a pretty big job, and I was wondering if those grants would cover something like that, or because I think you said the loans are limited to the City of Charlotte projects. So I just want.
Yeah, it's not a grant. Well, what we do with Mecklenburg now is not a grant. It's a loan program. It's a loan program that allows a small business to borrow up to $75,000.
Oh, okay.
We're not running anything from a grant perspective. I will say though, for any contractors that are a part of this program, we would suggest that for your equipment needs, make sure Robert, Janet, and their team know that, because when they're doing that cash flow, we'll want to understand how the purchase and our funding of fixed assets rolls into that cash flow analysis. That just keeps it clean across the board. So we'll rely on them in working with that. And it doesn't mean that you have to wait. Like, you can start on working with us to see how that financing might look early on, but you definitely want to make sure that this team knows that that's a need as well, so that they can work that into that cash flow model, so that all of us are clear on what funds and how those fixed assets will be repaid, those funds for that, along with the project analysis on the specific scope of the project.
Okay. All right. So even though it's Mecklenburg County and not the City of Charlotte, even though the facility is located in the City of Charlotte, we would still go through Robert for that. I just want to make sure I'm clear on that.
I think they should at least know that you're looking at the purchase of some fixed assets to support the contract you're talking about. Okay. The program I'm speaking about for Mecklenburg County up to 75, it's any businesses located in the county. Mm-hmm. And then we also have our own funding that can go up to $350,000 with the SBA. So we can find a way to structure your fixed needs and also your project-based needs with a part of this program.
Okay, all right, thank you.
We
I
can
hope I
lend
answered your
anywhere. We can lend anywhere in any of the 100 counties here in North Carolina. So,
Yeah.
so whether it's Mecklenburg or some other funding source, we can, take a look at your project.
These are your go-to guys right here. These two.
Okay, awesome.
One last question, then we're gonna get started. This is to Reggie and Mark. With your current business plan, and we know that the uncertainty of DEI and the current administrations, how is that? What are your preparations or safeguards to continue your business, to still work with the small businesses if funding is cut or reduced? Or, what's your plan of action if it happens to hit on the local level?
Well, I was gonna move out to California and hang out in some of that 69-degree weather myself.
That's in my plan as well.
Oh, that's in your plan.
I'm gonna learn how to play the guitar and be a rock star. That's what I was gonna do.
Yeah, there you go.
Yeah,
I'll be your drum. I'll be your drummer,
YouTube
man.
is calling. YouTube is calling.
No, it's a really important question. And thanks for that, Robert. Right now, our CDFI certification has certain requirements of Carolina Small Business Development Fund. And one of those requirements is of every dollar we loan out, 60 cents of that money needs to go to either an African-American owned business, right now, a woman-owned business, or a business that is owned by someone that fits into the low to moderate income bracket. I say right now because before this administration was appointed, we were faced with changing that CDFI certification protocol to African-American owned businesses, businesses owned by Latinos, and businesses owned by low to moderate income. Now, to your point about some of the restructuring and the changing with the DEI initiatives, we're not sure yet what that CDFI certification through the CDFI fund, how that will be impacted. But our goal and what we are planning is to not divest ourselves of those responsibilities, but to honor whatever the CDFI fund is requiring for businesses, organizations like ours going forward. But we really are focused on the economic factors that affect our small businesses in North Carolina. So it really is giving us an opportunity to work with many more small businesses, because to have the requirement of 60 cents of every dollar that we loan out to go to certain businesses, that also can be crippling if you're trying to, if you don't have that audience to give it to as well. Mm-hmm. And so we're actually looking at this as an opportunity to expand. We loan to businesses owned by anybody now. So that's never been a hindrance for us. And we're actually hoping that that we'll actually be able to sit down in front of more investors, folks who are really interested in still seeing that small businesses in general, really, I don't care who they're owned by, they don't always fit into the banking model. The banking model for what we call small loans, and small loans with banks are generally anything 500,000 or less. They usually just have a electronic approval system, and that approval system is usually based on the credit scores of the owners and or the business profile and that bank's policy, and they're just looking for some metrics. What we're going to continue to do is keep our approach of working very intimately with every business that sits in front of us, staying away from a model that can actually be less inclusive and really opening it up to see how much more inclusive we can be when it comes to veteran support, when it comes to agricultural support, when it comes to businesses that are turning to the fintechs for quick capital. How do we find a way to make sure that our small businesses in North Carolina aren't impacted like that? So we're looking right now at partners who still have an inclusive mindset, but we're trying to now avoid the labeling so that we can still stay within the mission that we have, which is to to help small businesses get financing of all magnitudes, whatever their characteristics are, because we really see the real challenge here. In addition to some of the businesses we're asked to work with now based off of ownership, the real challenge is small businesses looking for that group of funding from 0 to 500,000. We don't really care who owns them. We're looking at a way to make sure that those businesses can get capital when they're ready.
Right, great.
And
So,
one other thing that I'll just quickly mention is that when you think about job creation, most of the jobs in North Carolina are created by businesses that have less than 20 employees. So when you think about the economic impact of that and the needs of those businesses, that's when we talk about our policy and research and showing that economic impact and the job creation. That's where there's also a place for us to continue to spur economic development here in North Carolina. Most of the businesses that we work with fit that profile. I would say I would probably throw 90% of those this or more fit that profile. So, as Mark said, we're trying to look at the need. We're trying to look at the need of these small business enterprises. And what we're finding is that, that sweet spot under $500,000 is where we're going to continue to focus on and impact economic development here in the state.
great, awesome, thank you.
Mhm.
Yeah, I'm sure I'll have some more questions as we go through this, but I just wanted to get that out there because it's always a question in everybody's mind, and it's like the way you're sounding is like you're going race, gender neutral. Small business is your focus, which increases competitiveness as well because it's more inclusivity now with it.
Mhm.
Okay, great. All right, Janet. Sorry, I digress, So let's go ahead and go to the next slide here, and I'll talk about the next slide, then I'll turn over to Janet for a little bit. So why is borrowing money as a construction contractor so hard? So this is the questions to the attendees. What is the first word that comes to your mind when you think about getting a loan?
Paperwork, filling out all the paperwork.
Okay, paperwork. Brian, what comes to your mind?
Credit, obviously, one of the big things, being in the business and not necessarily being huge or large, if your cash flow obviously is not at a certain point, those kind of issues.
Okay. Did we lose Eduardo?
I think we did.
Like it, yeah.
Yeah, he'll probably be back. So, some of the words like anxiety, how, like Melanie talking about the paperwork, the details, the costs, difficulty, endless roadblocks. Those are some of the ones that come to my mind when it's like, oh man, getting a loan, all that. And as we know, when you go to a traditional bank, if you don't have all these documentations, business plans, they don't even want to work with you. So, this is one good thing about the program that we have. We work with you regardless to help you get that stuff ready so you can build your capacity. Then over time, you can go to a commercial lender and be ready. Because, if you don't have that credit history, weak or poor structural finance reporting, they're going to deny you. So this is one good thing about this program is we can help you to get you to that point so that eventually you can get out there and do it on your own. So, okay, Janet. Next slide, please. I'm gonna turn this over to Janet for a little bit.
Hey, Robert,
Yeah, go right ahead. Yeah.
I just might add one thing. I'm not sure it's said explicitly. One thing that we see that it has been a big problem and challenge for contractors in North Carolina, probably everywhere, but is their financial preparation and the financial records, especially when it comes to their works in progress and just keeping up with that and really having the confidence there and understanding that cash flow and more importantly, helping the banker understand, through those numbers. That's one of the challenges we've seen, which is a huge challenge, which is, as Reggie alluded to earlier, this program is unheard of on the East Coast with the amount of technical assistance you guys provide in helping contractors to really understand their financials and be able to explain them and present them in a way. That's been one of the biggest challenges for us and the folks that we've worked with.
Great, thank you.
So some of the key things to know about the contract financing assistance program is that you must all be enrolled in our contract development bonding program, which you guys all are. That's why you guys are attending. In regards to the projects or contracts that we are able to assist with at no cost to you or fees, it would be contracts with the city of Charlotte currently. Construction contracts and some service contracts will be considered. So just if you're in the professional services field, which none of you guys are, we would still kind of assess before we continue moving forward. But basically, any contract that is received with the city of Charlotte would be considered for the program. Also, you must be a MWSBE contractor. If you are not, we do recommend that you get that certification, and your contract development manager can go ahead and provide those resources to you. And then one of the most important things that we like to emphasize is pre-qualified when working with our team before the time of bid. So by pre-qualification, we don't mean that you're going to be pre-qualified for a specific amount just because this is contract-based financing. It really means let's get all of your paperwork in order before you even receive that contract. So that'll give us enough time to analyze everything. If you need specific technical assistance prior to you starting the contract, this would just give us enough time. It'll help you and it'll help us to better assist you. So currently, the max amount that we are able to loan for a specific project is $250,000. There is third-party funds administration that is tied to the program, meaning once you are approved for a loan, you are going to need to work with this third-party funds administrator, meaning you would have to open a separate bank account or a trust account that we will go ahead and wire all the funds to this account, and everything would be managed through that third-party funds administration. And I'll touch a little bit more on that later. And then currently, this always changes, but it's usually market rate over a spread of prime. But right now it's typically 8.75 plus that 1% origination fee, just depending at the time that you are applying. We'll always be transparent about the interest fee rate or fees that are associated to the loan.
Yeah. So, the pre-qualification timeline, it's about what, Janet? How long does it take?
Well, it really depends on the contractor. If you are able to get everything to us within 1 to 2 weeks, we can start working on that immediately. In an ideal world, I think it would take us roughly around 4 to 6 weeks to just analyze everything that you've submitted for us to create a cash flow projection, for us to create a loan funding request, and then we just package everything for Mark and Reggie and their team to kind of review and see if there's any additional questions. So it's really important to kind of have all of our ducks in a row before we even consider to either bid on a contract or before it's even awarded.
So the contractor is one that's really controlling that 4 to 6 weeks, not us. So that means, if you're serious about this, and she sends you the checklist, there's items that you have to submit. We can't do it for you. So that's why we like this pre-qualification to start, so you're not being rushed and we're not jumping through hoops to do it properly. Because, some people are like, oh, I got this job, I need help now. Let's not be reactive, be proactive. Is what the message I'm trying to get with that right there. And you guys know me, I'm not going to sugarcoat it. I'm just going to tell you reality. So it helps you, because it's hard. It really is hard for us to help you when you wait to the 11th hour to ask for help. And I know that Melanie and Brian, you guys have been great reaching out, asking good questions. I love that. But, if you're serious about this, let's get it started too. All right, Janet.
Okay, so what's different about this program versus your traditional funding sources is that we do use your contract as collateral. So that is what we kind of utilize. So if you have no money for injection to the project, that's okay, just because we'll go ahead and utilize your contract as a collateral. So if your contract is $500,000, we know if you're going to perform the work, you're going to receive those $500,000. So for the loan funding, it really is based off of your contract amount, and we'll go ahead and do the cash flow projection based off of your job cost breakdown. We'll go ahead and assess those needs. So just because you have a $500,000 contract doesn't mean you need $500,000 to fund the project, right? So we'll go ahead and break everything down for you. We'll only lend what is actually needed. So once we've established what is going to be lent to you, the money will be released as needed. So if you were to get funded or approved for $250,000, but you only really need $50,000 to start with, we'll just release those $50,000 to start with. So it's really being controlled, but it's also used as a project management and loan monitoring aspect of it. As far as the funds, they are earmarked specifically for that approved project. So if we approve this contract and the loan funding request was specifically made for this project specifically, so all the funds are only to be used for the project that we've approved for. So your labor or your payroll can only be used or allocated specifically for the project. Any materials that you may have to purchase the funds can only be used for that project specifically. Everything will be monitored and controlled by the third-party funds administrator. So what would happen is you'll open up a bank account with City National Bank. They'll go ahead and wire those funds over to the account. If you need your payroll to be paid, we would need you to open a second account for payroll specifically. What you'll do is you'll request funds to be transferred over to the payroll account. And then if you are utilizing ADP, Paychex, QuickBooks, whatever your payroll service is, they'll go ahead and impound this payroll account through the funds administrator, and they'll go ahead and deduct those payroll needs through that. Are you guys using any type of payroll service? How are you guys handling your payroll right now?
We use QuickBooks.
QuickBooks.
Very simple, small and simple.
So it is important to make sure that all the backup that is being utilized for payroll, they will need proof that you're paying your employees specifically for that project. So any request will be through funds administration to pay your labor, get your overhead, any materials or equipment. Equipment can only be leased or rented through this. And as far as the interest and fees, they are competitive market rates. Again, depending on what the interest rate is, we'll always go ahead and relay that information to you. In regards to the process of how the funds are going to be allocated, it's important to know that even though you are funded or approved for a certain amount, you don't necessarily have access to the funds. So everything would be through the funds administrator. Once you've completed the work and once you've submitted your invoice or your pay application, your progress payment would go directly to this trust account. And through the trust account, what we'll do is we'll pay any bills that you need to be paid first. So equipment, payroll, whatever it may be. Then we'll go ahead and pay the lender, depending on how the deal is structured. If it's an interest only deal, then we'll make sure that the lender is being paid, and then whatever is needed to go to the contractor for overhead or any profit that we're able to release, then that would go ahead and be released to the contractor at that point. And then we also do offer Robert's amazing field support services in any contract aspect that might be needed during the phase of construction. Any questions on the structure of?
Yes.
Yeah.
Yes. Okay, so my brain is whirring with a few questions.
Sure.
I'm not saying that my questions and my observations is not intended to reflect any kind of negative perspective of any of this, but my impression of what I'm hearing is that this is maybe a little bookkeeping intensive for the contractor, because I hear, a separate payroll bank account, a separate account for third-party admin. Also, most likely, naturally, you'd have a third bank account to manage the operating expenses of the business in general, whether you had third-party administration or not. So I'm just wondering how it just somehow I just feel inside that there would need to be some focus on careful coordination with bookkeeping, a bookkeeper, because there's other people who are handling the money for obviously, good reasons. But yet there's always that paperwork flow and the digital paperwork flow, the digital, I should say, documentation flow, to make sure that your books are always current and in order. Can you speak to any suggestions to start to help us start thinking about how to get organized from that side, and then how to maintain that organization and not let it slide?
Yeah, so my suggestions would be, I know it sounds a lot, right? But these are things that a company should already be doing. We should already be projecting how much money is going to be needed on a monthly basis. So when you're working with the funds administrator, it's one spreadsheet. You'll list everything that needs to be paid. So you can also use it as a back office, right? Everything that you're listing on there, you can just save it. All of these invoices are relative to this project. In the future, I know how much I'm going to need. So you can also use it as reference when you are bidding for another job. But it's just good practice to kind of make sure that you're organizing and maintaining all of your documentation specifically for one project. What we see usually is people start mixing their payroll. Well, this person was on this job and the other person only worked a few hours, and they lose track of how much money it is that they're actually putting into the project until it's too late and they realize that funds have been commingled and they're just not able to really finish the project. So even though it is paperwork intensive to a certain extent, the first month is going to be, you're going to want to pull out your hair because it's not something that you're used to doing, right? But once you kind of get the flow of everything, and I know how many people I'm going to need on their job. I know the labor is going to be X amount. Did I already purchase all of the material? No, let me just send the invoice to the funds administrator. They'll pay everything on your behalf. So you can also see it as a positive way that they're your back office needs and you're the owner saying, hey, I need X, Y, and Z to be done. And that's
Yeah.
the view that I would like to, or the mindset that I would like to have moving forward.
Yeah. Also, Melanie, on that, it's like when you're bidding a job, you already have your schedule of values. You already have your general conditions that we've talked about several times in our bidding estimating. So you're kind of transferring that information that you already have for the project onto some of these forms. And with a third party funds administration, they're the ones that's opening up a lot of these accounts and stuff. So it sounds like you're doing a lot more, but technically you're not. As long as you have your stuff in order, like Janet said at the beginning,
Mhm.
then it's not that much more, of submitting your draw request, which Janet will go through that. But today is kind of getting a feel, but tomorrow we'll go into a lot more examples of the cash flows and all that. So, but your questions are valid because you're thinking it's like, oh, she said open this account, open this account. But this is why we do a lot of that service with the
Mhm.
third party and with Carolina Small Business Fund. So it's not that much more on you.
Right. Well, I'm also thinking, I hope in a logical way that at some point, once you get your groove on, that you may have more than one project in the pipe. That you're at some stage.
Mhm.
You're always planning forward. So that's why I was just thinking of, and then of course she did say, when you're paying multiple people and they get commingled, and it's just like I am a little bit of a freak for keeping everything separated, which requires a lot of attention.
Which is great because you have to keep it separated. Because if
Mhm,
you don't, you don't know where it's going, and then you're in trouble
mhm.
because you're not paying attention. So Melanie, you are doing the right thing. So, and that's the important part of, like I've always told you guys, regardless of the size of your business, run it like a big business because
Mhm.
you can't skip some of those steps.
Right.
Sometimes people want to and they get in trouble, but don't skip a step.
Thank
So,
you. Yeah.
Quick
yeah.
question, and maybe this is going into too much detail, or maybe it's something that's going to be covered tomorrow. But in terms of just thinking about what, Melanie was speaking of, turnaround time, like if you have invoices that need to be paid or you have to pay your people, obviously if it's being paid by a third party, you have to submit your request through them in order for things to get paid. Um, how much leeway do we need to give on something like that? Is there a general answer? Or is that something that would be worked out as you go into specifics on the project?
Yeah, so the funds administrator has 5 business days to respond to your request. So it's not, we've seen it a lot where it's like, here's my draw request. Did you do the transfer from my payroll? You knew you were going to run payroll a week before, so that's on you. But they do have 5 business days to respond to your request. He usually, the most that he's taken is 2 business days. But everything is done in a timely manner. He'll drop anything to make sure something is getting paid on time. So But just on paper, it is 5 business days, but he'll make sure to take care of that request. Because we're here to help, right? We're not here to stress you out.
So again, it sounds like you're providing bookkeeping services of a sort. I mean, it's like if you've got someone who's going to make that, they've got 5 days to respond. You can
Yeah,
sort of
but
get it in the pipeline and then
right, but
move
you're
on to
supposed to
something
get,
else.
yeah. So if you don't submit anything to him, he has no idea what's going on. So it's only to a certain extent, right? If he'll just say the bank account is low for your payroll account, and it's not really his responsibility to say, do you have enough money in a trust account? But he'll still give you a fair warning. But it's just, yeah, he'll do all the back office stuff. You're just kind of really giving him that request to do so.
Thank you.
Okay, Mark or Reggie, anything you want to add into there?
I'm glad great questions and discussions being asked.
Absolutely.
So it helps us. But Mark, you made a good comment. I'm not going to steal your thunder. I think you should share it with the team, because I mean, what you're talking about, just kind of you working the just focus on working the contract and let Meriwether and Williams and their process handle the flow of money. You still have access to those accounts. They're still owned by you. You just need it kind of takes administrative task off of your desk.
Yeah, I mean, it's almost hard to believe that as a contractor, you get to go do what you do best, and you got a back office that is really managing things for you. And if you've got a CPA, maybe you get them in direct contact with that administrator and let them handle the accounting, and this frees you up really to do the work. It is, Melanie, I understand your question, because it's taken us a while to really realize, wait, you mean that you guys do all of this and we get to work, or the contractor gets to work? It's amazing. And we've seen it firsthand. We've our organization with a borrowing relationship that's currently has, and this guy, you wouldn't believe how relieved he's been to remove some of those responsibilities, passing it on to a trusted partner. It's been incredible, and I dare to say he didn't even realize how effective this would be until he got into it. I think at least that's been our observation. I'm sure Robert and Janet might agree with that.
Yeah, I agree.
Yeah.
Okay. All right, next slide, Janet.
So this is a quick overview, kind of simplify everything after all the information that was thrown at you. But first process would be to be enrolled and get that assessment done with your contractor development manager. Once they've established, or you've established, a interest in the contract financing assistance program, they'll go ahead and refer you to myself. And then we'll do a brief overview of what the program is, all of the details that I've just shared. If you are interested in bidding on a project, I will go ahead and make sure to send over that checklist of documentation that you will need, just so you can get familiar with what we are requiring and give us and yourself enough time to kind of process all of that. Once we have an idea of what it is that your cash flow needs are going to be, we'll go ahead and do a preliminary cash flow projection based off of the numbers and SOVs that you submitted along with your bid. So our hopes for you is to bid and to win that project. And then once we've established a solid contract amount, your bid has been approved, we'll finalize that cash flow projection, go through all of our documentation, make sure that we do the loan funding request, start that third-party funds administration process of opening up those bank accounts and just really managing and loan monitoring as we get those progress payments in. And this is just a process of what I would like to say. It's pre-qualification. Pre-qualification really is you not having a contract in hand. When you're still bidding or you're looking to bid, we'll start the pre-qualification. Again, the pre-qualification doesn't mean that you're going to be approved for a specific amount. It just means that we'll be ready with all of the information that is required from you to kind of move forward. So I'll do the onboarding, the checklist, all the applications that we require and that Carolina Small Business requires as well. We'll do our internal process, and that internal process really is just making sure we have your business plan, making sure you have some type of certifications, your financial information. If you submit all of your financial information and then you get a contract 6 months later, we will go ahead and request updated financial statements. And then we'll also start speaking to our partners to kind of make sure that they're aware that there might be a potential borrower coming their way. Because we do, believe it or not, we do work very closely. So if you try to go to them and then try to come to us, we'll find out. We'll find out that you are just, I'm trying to get the ball rolling. If you already have a contract, we'll obviously move a little quicker. It still requires the same process, onboarding, checklist, loan applications. We'll do the underwriting process, which would be the loan funding request, which would have your organization and background information, overview of what your contract is, your financial trend analysis, our recommendations. We'll submit the package again to our partners, and then we'll start the process of originating the loan agreements, getting that trust account set up, and then just monitoring the funds. So again, very important for you to get the pre-qualification process started, even if you just want to look at the checklist to see what it is that I need, or I need assistance with a business plan, or how to even set up a financial statements. Are my financial statements on accrual base or on cash basis? If it's on cash basis, we'll prefer it to be an accrual base just because that really does provide us with a more accurate picture. But just little things that we can kind of assist while you're submitting your information. And again, everything that we request, we're not just requesting because we want to have it. There's a purpose behind every document that we're requesting. Just gives us a bigger picture of who you are and how we can help you moving forward.
Hey, just real quick with this, this whole pre-qualification process is confidential. I don't see any of this stuff. Janet is the one that's collecting it. It's secured how we receive the information from you. Number one. Number two is be honest when you're going on this onboard. Don't withhold information, because when we do find it out, then it makes it harder for us that we have to go back and fix things. We're here to help. It's not like we're, the cops here. So, sharing that information with us helps us. So when we do the underwriting and go to Mark and Reggie's team, we can give them all the information so they are prepared. So, withholding is the wrong thing to do. Not saying, it's like, okay, yeah, I had a judgment against me or whatever it is. They'll find out, but it's just be upfront with it so we can help. Because we see that happen. It's like, oh no, this is for another project, but you're putting it in with this one. You have to be honest with us. We're all a team here to help. But I just wanted to add that little philosophy in there.
Yeah, I second that. We're transparent with you guys with everything with the process. We expect the same transparency, whether it's I can't fill out this form. Okay, let's set up a meeting and fill it out together. Whatever it is, just transparency will kind of is key and just gonna keep the ball rolling and moving everything quicker. So to avoid those roadblocks that we're all trying to avoid.
All right, keep rolling here. I know we're starting to run short on time for day one here. And you know, if you got questions, if we don't get to them today, definitely tomorrow as well. So, so I know, how does this help small emerging contractors? And it gives you the possible to bid on projects that you haven't previously been able to obtain, because we're giving you the funding that you normally don't have for startup, i.e. mobility, or if you've got to, with some of your suppliers, 35% down, whatever it is. So we're making it so you can bid on other jobs. This also helps you boost your credit score. As you know, that credit score helps you a lot with getting that interest rate down. The better, higher your credit score is, can help. But since it's not a traditional loan, it helps you build all that history for you. And you also, gain the skills of cash flow, which we'll go in depth tomorrow with, and protect your profitability, because you're here to make money and grow your legacy. How do you do that? So this is another tool that, you guys have heard from me many times of, it's like, hey, here is your bottom line here, how you're going to enhance your fee, your profit, buyouts and all that. But, we want to make sure that we can help you. Excuse me, I'm still fighting this flu here. So, that's how it helps you. It helps you grow. And, this is where one of my areas is, as you guys know, field support, that one-on-one coaching that I do to help you with a lot of this stuff. I will have to sometimes pass it off to Janet for certain things because I can't do it all, but, I would love to, but I can't. So, it just removes some traditional barriers, so you can move forward with it. So next slide.
I'm sorry.
Yeah.
Are we able to ask questions or
Yeah,
is that
yes.
Oh,
No,
okay.
yeah, at
My
any
apologies.
time, please do.
Yeah,
Yes.
okay. So one of my main questions is is there hold on, baby. I'm sorry about that. Is there a way that I want to word this correctly? And so is there a way that we're able to meet with you guys, like you were saying? Like you
Ye-
were saying, in regards to how do we get to this point? Or is there another area that we are supposed to be in with another, set of individuals that help us get prepared for this part? Because for me, I've never taken out loans or anything for the business. I've just worked hard, paid my staff with what I worked, from how I, the monies that I got from working. And then we, started paying out once the money started coming from the jobs. You see what I'm saying? So I've never been in a situation where someone was able to show me how to get ready for this point. So is it credit, getting my credit together, getting my paperwork together, bank statements, what that needs to look like, things like that, and I just want to be transparent in my question, because I know, I'm sure there's other people that have that question too. We don't know everything, right?
Right.
I've had contracts before, but that doesn't mean I can't improve on my process through those contracts, so, or future contracts. So I just wanted to pose that question just to see if I'm, I might be overthinking it, but definitely want that resource if that is there.
Yes, the resource is there. You're enrolled in the program, so your contract development manager is your first point of contact to also assist you with some of the training and education and the coaching. But for the contract-based finance piece that we're talking about today, your CDM will then contact Janet and say, okay, we have Jasmine that's interested in CFAP. Janet will then set up a meeting with you to go through the onboarding, to take you through all that, and the education. If there's something that you're missing, she has a checklist. Jump in, Janet, here, because I'm
Yeah, so it's not, once we've, or I've received notice that you are interested in just learning a little bit more about what the program is. I don't just send you the checklist and say, this is what we need. That's not helpful for anyone, right? Because I want to make sure that you understand every document that you're submitting to us is important and why it's important. These are information that traditional bankers going to need from you in the long run, because again, that is our goal for you to graduate on to bigger and better. So if there's any questions that you may have regarding the checklist, anything in regards to the background and organization aspect of it, or your financial information, if you don't have financial statements, or if you're still on an Excel sheet, we'll make sure to kind of guide you on what a balance sheet should look like and what a profit and loss sheet should look like. So I'm your resource for those aspects of this part of the program.
And then also with Reggie and Mark, they also have resources. So if you don't have an accountant or somebody, they have a great database over there that, we can go in and find resources for you. We also have a resources as well that we can connect you with. So Jasmine, there's so many ways we can help you, and that's what the program is here to help you. If you're missing something, we're going to help you. We're going to educate you. We're going to coach you, all that. So we're going to hold your hand. So does that kind of answer the question?
Definitely. Okay. Thank you so much. I appreciate that.
Okay, great. Thank you. All right. So we're probably going to end today with this one slide here. Yep, we sure will. So, as we're doing the onboarding, this is where we're getting to know you is, there'll be a series of questions and it's like, excuse me, do you currently do your general conditions? That'd be a question we ask. And if not, then it's like, Jan, if you can kind of share, templates. So we have templates for you if you don't have anything. So as you guys know in my classes, I have tons of templates that I give you guys to utilize. So this is kind of one for, general conditions. And, we'll sit down and go through it, with you if you don't know how to do general conditions, because that is some of your profits and losses right there in your admin back of office. And the way that this is set up, the areas in yellow, and this is only internal. It doesn't have to go to anybody. It's for your tool only. So, you put in a lot of information that's in yellow, it comes from the plans. Duration is, 40 days. But, if you have a project manager, what is the percentage that they're going to be dedicated to this one job, right? So for this example, they're 25% of the time. Your superintendent or foreman, the person that's in the field as manager, is 100%. They need to be there full time, right? They're not working. So if they're working, then they go onto your labor side, whatever it is. So there's a lot in your administration, accounting, 5%. And then you put your percentage in there, what you want that person to do. And then your labor rate is basically off your weekly. So if you kind of click on one of those, Janet, not that one, and the yellow, because this is where you change it. So the labor rates for one she clicked on was for your project engineer, $74 an hour, but for 40 hours, that gives you $29.60, for the week. But for the duration of 40 days, it's $7,400. So this allows you to track the individuals of your admin, your back of office people, so that way you're not overspending on a particular project. So this is one of the educational tools that we'll go through. If you don't know how to do it from my bidding estimating, you guys have seen this, so it's nothing new. But if some people haven't been through that yet, we like to get these standard templates out there so you can utilize them. So if you scroll down, it kind of goes permits and fees. Now, when it says labor here, this is like general laborers, the people that come out there sweeping, just not physically doing a trade. All they're doing just cleaning or whatever it is, driving. You might need somebody out there. And then it goes into your job site office, if you got a trailer, toilets, furniture, that Textur, that is that third party billing that most general contractors or somebody's going to use. There's a cost associated with it. They'll give you the manual. So as you can see, there's a lot of things that you need to identify for your general conditions. And then if you scroll down, there's this temporary facilities, storage trailers, temp toilets, water, all that is kind of listed in here. So, this is one that we can give you and walk you through so you can understand where your numbers come from. And then it comes down to your general conditions, per month, week, and day is how it comes up. So in this example, it's 21, 20, 23, 26 per day is your general conditions. So this is a great tool for you to start to educate yourself of, when you're bidding jobs, you've already got it set up. There'd be some minor tweaks here and there. And that's part of your bid. Your proposal is your general conditions, which is the part that Janet will need when they do the cash flow projections. So it looks like it's very intense, but it's really not for that. So the other one that is important, you can close that one out, is the schedule of value. Sometimes John or they might call it job, excuse me, breakdown. But the schedule of values is pretty much, final cleaning and your amount that goes there, demolition, and then you put your costs in there. And this one kind of gives you cost per square foot, which then for future jobs, what it is per square foot. And this is broken down for material and labor. So which, you need to be able to pay your payroll or your labor guys, what the amount is. So this schedule of values is important. So if you scroll down, Janet, then you get to your soft costs, permits, inspection reports, general requirements, general conditions can be thrown in. And if you got your insurance, it could be 3% or whatever it could be, and it'll help you calculate, if you got taxes, and the fee is on here is your pure profit. So everything else, permits and all that is kind of like your overhead, but then the profit is your fee. If you need to carry contingency, they'll tell you. So it breaks it down for you. So, we can go through this again when you need to. The other thing that we need is a detailed schedule. And, within the invitation to bid, there's a preliminary schedule that's there, which kind of gives you a duration of where your piece is going to go. But from there, when you have been awarded the job, you need to do a detailed schedule. We need to see that too, to help monitor. That's where I kind of come in with that. When you need to mobilize, what is your end date, all that, because that is also taken and put into your cash flow projection. So all these things that I'm kind of talking about builds into your cash flow projections. The other question that I come into is the billing. How do you bill? And I would like to see an example. And if not, then we like to use our AIA 703, 702. And with the template I have here, which I had to use several times with a contractor on a loan because they was not able to do billing correctly. So this is a form that we use to help you to do billing correctly. And on the project information tab, it's where you're going to fill in all the basic information right off the bat. And then if you go to 702, it fills in the information at the top. So everything I have is linked together and it helps you fill it in there. Also have a cover page that some owners like to see because they don't want to go through everything else there. But on the 702, I'm sorry, Janet, if you want to, I know Janet's like, will you stop jumping around on me here? This 702, 703 is used in the construction industry. So just about everybody is going to accept this form of payment. I mean, the way you do your pay app, because everybody's using it. And not only that, you can also get it notarized, and then it'll go to the architect, the owners, so that is great that you have this. So go to 703. So you remember we were talking about your schedule of values. So you can just almost cut and paste your schedule of values and put it into the 703. So, the item number is something we can also, I mean, we're missing, if you scroll on the bottom one. Yeah, yeah. So there you go. So, this one was broken out by area 1, area 2, 3, 4. So this example, they did saw, cut, and demo, and that was their amount that came from the schedule of values. So we just populated this from your schedule of values, which is something that's measurable, that they can go out into the field and look, say, yes, this is done, because you want to make sure that you get paid. So, with this example, and it tells you, okay, I'm doing 5,000 this billing period. Then it tells you what your percentage is, and then it will also give you your remaining balance. So this is a great tool that we can sit down and go through again for you guys. But if you scroll down, keep going down to the bottom, keep going. So, okay, the subtotal cost is your hard cost out in the field doing all the work. Your soft cost is your insurance, general requirements, general conditions, overhead and profit permits. Then this example, what this contractor did, they rolled everything up above into the hard cost. We didn't know what his general conditions were, which made it very hard for Janet and them to understand what your costs are for your administration. So we had to do a reverse engineering to figure it out. And it's hard. So that's why we use that general condition, and you plug those numbers in here and there, and that gives you your grand total, which should match your contract value. And then each month you would just go through and update this, and it's another good tool to use. But if you have your own billing invoice that works, I'm not going to change it. But if you want to start using something that's an industry standard, then we can do some coaching on that for you. Any questions?
Could you let
Yeah.
us take a peek at your cash flow projection?
Yeah, let's go ahead and jump on that. 'Cause I think everybody's seen my change order requests, my logs. So, and they've seen the whip as well in my classes. So I'll turn this over to Jan. Now, this is just going to be a brief talk today, but tomorrow is when John is going to really dissect this and the balance sheet and profit and loss. So, Janet, I'm going to turn it over to you.
Sure. So this is our, sorry if it's not as clear, but this is the cash flow projection. What we'll do is based off of your SOV or job cost breakdown, we'll take what your contract amount is, we'll break everything out. So it's really important to know how much you're allocating for labor for this specific project, because this is based off of the project. We need to know the duration of the project. That'll go ahead and let us know how much funds we're gonna need, just kind of make sure we have the timeline correct. Make sure we have your general conditions. Make sure we have your overhead on here. This other direct job cost is the cost of the loan, of interest fees and origination fees for a 12-month period. As you can see, it's only about 2.3% of your contract value. So
It's not bad.
it might seem, some people see $11,000, but what is that really compared to you're getting $125,000, right? So this is the most important, one of the most important portions of our cash flow projection. It really gives you an overview of what it is that you're going to need. If you were to put, I don't know, $300,000 here, just for the heck of it, it'll show, oops. it'll show you, it'll calculate, you're spending a little too much on labor. We're not going to make any type of profit. So that's why it's really important as you're bidding, if it's something that you feel positive about, or just want to, we can send you the template and kind of you guys go ahead and plug in these numbers and kind of see, does it make sense? Did I bid this correctly? Because it's one thing submitting numbers versus seeing it, you know, overall and the percentage that's allocated for each labor, materials, or any of the other costs that you may be inquiring on the project. So it's a nice tool and habit to kind of start doing it as you continue to bid and as you continue to get these jobs that are awarded. Briefly, this is the amount that we've allocated to see that would be borrowed. As you can see, if we were to remove this, this contractor is not able to cash flow positively, regardless of everything that's on here. There's just no money to inject into the project, which is why you know, they're applying for the loan. But once we plug that in, you can see there's cash flow, they're cash flow positive throughout the duration of the project, and they're able to pay it off at the end. So if we see that you're able to pay off the loan before your project ends, we're more than happy to do that. There's no penalties for paying it off early. If you feel that you guys are receiving the progress payments quicker than expected and you feel that there's no need to continue with the loan, that's completely okay. Our goal is for you to get these payments in a timely manner. Briefly, here's just the percentages and the calculations of the interest rate. And then down here, these numbers here are straight lined for a 9-month project. But if we know the actual cost of what's going to be needed the first month, second month, we'll obviously go ahead and adjust it to your needs. But this is just for example purpose, and we just straight line everything, assuming the labor is going to be the same throughout. But yeah, so at the end, we'll include all of these items for month 1. What we see here is that you'll need $73,000. That would be your ending cash, but you would need $51,000 for that first month. And then what your ending balance is, it's going to be your beginning balance for the second month. So we complete this for you. All we really request is making sure you have these numbers up top. Believe it or not, 90% of the time, contractors don't have these numbers, which kind of makes the process take a little longer. But if you are bidding, whatever numbers you're submitting along with your bid would be a good start to kind of make sure that everything's making sense.
And one thing about this model here, excuse me, is, you know, your contract is the collateral, right? So once you get the executed contract, you know, we have that, and that's how we can move forward, because within that, your terms and conditions of what is your pay, you know, is it net 30, 45, 60? That helps Janet and John start doing this model for you, because they can extract information out of your contract that they need. So, you know, getting your contract is very important. And also you need to know what's in your contract too. So that's why getting these numbers accurate, as general rule of thumb, you know, your general conditions, it's about 12%, your profit. Now there's a gross profit and a net profit. On my sheet, when I said fee, when you saw that, that is net. That's not your gross. So at the end of the day, that my profit on my sheet is your net, not your gross. Because, you know, your gross sometimes is different, but once you pull out some of the overhead, this and that, and, you know, so that's the understanding between net and gross for you to understand what that means when it comes to your profit. I think that's one of the other things that I wanted to touch base. And then the schedule, as you can see how it can be monthly, weekly, or however it is, Janet and them will tailor this cash flow for you. And there was a question about payroll. If you do it weekly, on here, we know what it is monthly, so you don't have to do a draw request every week. You can do it once for the whole month. And that cuts down on some of the fees of someone touching your account. If it is a city project, the program covers the third party administration fees. So those fees are covered. Now, if it's outside of the program, then you are responsible for that, but at least it's all captured here. I've seen other people take this form after they learn it, and not just for a project, they put all their projects in here. And then you can see what your company looks like in the snapshot month to month with, okay, am I losing money this month? Do I have enough cash on hand? So once you get used to this, feel free to work with it to make it fit you comfortably too. I mean, it looks complicated, but it really is not, and Janet has done a great job of learning this and being able to present, because when we started this program 5, 6 years ago, I was one of the originals doing this stuff, and man, I was like, I'm not an accountant, but it was intriguing to me, and I can help contractors now.
So I do have a question. Janet made a comment about the other direct job cost at 2.3%. Does that 2.3% also include that back office service? Is that where that's rolled in?
Yeah, so if it's for a City of Charlotte project, the program picks up that cost. If it is not, it's actually a 1% fee for the total amount of the contract amount and the funds that are being borrowed. But his minimum is $5,000. But depending on, who the contract is with, we'll make sure that we're transparent about those fees as well. But typically, even if we were to include something like that, it's no more than 7%, including everyone's fees, as far as like third-party funds administration fees, interest fees, and origination fees. So we like to kind of see it as in, would you rather pay even 10% versus using your credit cards? That's 25%, and you can't even pay labor on that. You know what I mean? So it's just really seeing the benefit of this, even though the number might seem high, it really is more of a benefit than it is yeah.
Well, I don't think of it as being high as much as I think in terms of a physical person that would need to be doing this somewhere else and how much they would be getting paid and all that. So I was just curious if I would see that cost plugged in on the other direct job cost line, or if it would have a separate
would be on there. Yeah. So if we were to just do quick math, it would be this plus this. It would be 1% from the 625, so like $6,225 for his
for back office.
The third-party funds administration fee on top of that.
No, I know how much I have paid to have a bookkeeper that did not give me the books that I paid tens of thousands of dollars for.
Yeah.
So no, I'm.
Well, I wish there was more of you.
Yeah. Great.
Yeah. This is exciting to see offered. I mean, this is nice.
Yeah, we're just happy
Better
that
than nice. That sounds like a mediocre word. But...
no, I know it's the end of the day over there. It's 7 o'clock, so you guys are winding down. But it's just great to have a partnership with Carolina Small Business Fund, because they have the passion just like we do for this. We want to take that fear away from you. And it's like, hey, don't be afraid. We're here to work together and help you. So, that has always been my philosophy. That's why I left a large general contractor and came over to this side of the world, is advocating and helping and educating and training. That's my passion. So, and that's why I love doing this.
Well, some of us don't have enough fear at times, but the feeling of being overwhelmed is, I mean, that is like breath sucking. It just, because there's just so many parts, you know, to really, you know, feel good about what you're doing and that you're on top of it when you're a small business wearing many hats sort of thing. Is the goal for me is to stop wearing so many hats and let other people wear hats and create jobs, you know,
Right.
and to build up the local economy in small communities. That's sort of what got me to leap into what I'm doing.
Okay, right. So with that, you know, I'd like maybe Mark and Reggie to have any, you know, comments and anything, and then if you guys have any questions, and then we'll call it quits for the day.
I am sorry to butt in again, but you were mentioning about doing this again tomorrow night. But for some reason, when I registered, I only received something that I thought was just like a one-day thing. And I'm happy to be here tomorrow. I'm just letting you know I didn't get anything that populated my calendar for more than today.
Same here. Yep, same here.
Okay.
Yeah, so my apologies. Something happened on Zoom. I'll be sending out another invitation link for Zoom for tomorrow as well. So please check your emails tonight, and then I'll be resending another follow-up again tomorrow as well. So you will have another link for tomorrow.
Perfect. Same time?
Same
Yes.
time tomorrow, yes.
Great.
And
Thank you.
yeah, we'll have John Miller on here, and I won't talk as much. So it'll be John and Janet's show tomorrow. I'll try to be quiet, and it's hard. You know, I'm like a preacher. I can't be quiet.
Robert, you do great. Thank you.
You're
You're our
welcome.
best friend in this.
Okay. So Mark and Reggie, if you have any questions, comments, closing remarks?
Very brief, because I know, especially with it being a long day for everybody here, especially on the East Coast, but just on behalf of our president, Kevin Dick, who actually worked in the local government there and closely with the local government there in Mecklenburg County for several years before he came to be our president. He is in 100% support of this, and definitely has kept us excited about this. And hearing the questions tonight is just a reminder for us at how important and valuable this program is. And when you think about the affordability, the access to capital, and the technical assistance that a contractor gets in this program, you couldn't probably get one of those worksheets for that you guys provide as a template for the cost of everything that you're doing with this program. So we definitely appreciate being a partner of this, and we're excited to do whatever we can as a partner to help these small businesses to be successful. So thank you guys. Thank you, Robert and Janet, for what you all are doing. And thank you to the contractors who are interested in this, because we want this program to be successful.
The only thing I'll just add to that is, again, to you, the contractors who are participating tonight, to those that will participate tomorrow, it is literally things like this that make the difference between success and not being successful. So the time that you're spending now, you will get return on this investment. What I've seen this evening as far as how this can support, contractors that are growing in this space, I'm just happy to be a part of it. I'm glad that we've got contractors that are participating in this, and I look forward to seeing dozens and dozens and dozens of success stories coming out of this. So thank you guys for what you're doing.
You're welcome. So do you guys have like virtual workshops and things that we could share links to our contractors to maybe attend, or anything like that, that can help them?
What I'd like to do, Robert, you and I have kind of talked offline about a few things. Would love to see what's possible in terms of us maybe developing some general like something we might be able to put on our online training that just maybe kind of talks through this process in general and directs people to programs like this. We don't have anything coming up, Mark. I don't know of anything that we have coming up like this, but my wheels are turning in terms of how we can get you guys on our Vivid platform and maybe do a series or maybe a training or something that you may already have packaged where you can provide additional technical assistance to some of our contractors who may not be able to be with us. So again, it's a fantastic session.
Okay, great. Thank you.
And for all the contractors on the line now, if you go to our website, which is carolinasmallbusiness.org, and go to Learn Online, that is the digital classroom that Reggie was referring to. You can definitely jump onto that at your leisure and look through some of those offerings there as far as the digital classroom. And if you have some ideas on some things that you don't see, let us know, because we're always building out that library to try to make sure that it's specific to the needs of the small business community.
Yep.
Great. Thank you both, gentlemen. Okay. Any last questions from anybody? Okay, Janet, I'm gonna let you close it out.
Thanks, Robert. Yeah, I think great session. I always learn something all the time. And it's nice to hear questions from you guys, how we can maybe improve our process, or what are the fears that you guys have, so I can address those the first time that I'm meeting with you, just kind of giving you an overview of the program. But thank you for being interactive, and I hope to see your names on my screen so I can be sending you that pre-qualification checklist to kind of get started. But one last ask for you guys is if you guys can quickly do a survey just to get feedback on the workshop, if it was too long, if it was not long enough, if it was too short, or if it was just other detailed information that you guys are looking for. Yeah.
And the link is in the chat as well.
Nice.
Yeah, so Janet, while you're doing it, she'll be showing you that checklist tomorrow, going through, a high level with that. John will be going through the cash flow in detail, balance sheet, profit and loss. I think those are like the 4 things that we're going to cover tomorrow.
Yes.
Yeah. So, I just come in and just open the gate and let Janet and everybody else be the closers.
Thank you once again, everybody, for joining us tonight. Thank you all for also filling out our survey, for our feedback, for our presenters, so we could work on improving our workshops in the future. And once again, I will be sending another email out for the link tomorrow, so please be a lookout for that. If you have any questions, please feel free to reach out to us. And everyone have a great night. And thank you again for Carolina Small Business for joining us.
All right.
And hopefully see you guys tomorrow.
Thanks,
Thank
everybody.
you guys so
Okay.
much. Have a great evening.
Well, thank you for joining us again for day 2 of the Contract Financing Assistant Program seminar series. Hopefully you learned a lot yesterday, and today be prepared to learn some more. I'm gonna give it up to Janet to introduce everybody.
Okay. Hi, everyone. Nice to see you again. So for day 2, John's going to go over a few important items, such as checklists and why we require all of the documentation, as far as financials, project information, and then we'll go over the cash flow projection one more time. So let me move. And then also, John, if you would like to introduce yourself, I know
Sure.
you haven't
Sure.
really. We mentioned you yesterday as
Oh, you
being
did?
an
Okay.
essential
Well, I'll get.
part of our team, but I think it would be nice for you to introduce them.
Well, I appreciate that. Thank you, Janet. And Yes, John Miller. I have been an underwriter in one form or another for about 47 years now. I know I look very young and robust, but this program that we've been talking to you about yesterday and continuing today is something that's very near and dear to all of us because it really provides a solution to the insurmountable obstacle that contractors face when it comes to having enough available cash to cash flow projects that they're otherwise very well qualified to handle. So we're enthused about all of that. And my background, actually, I started as a surety bond underwriter way back in the 70s and evolved to construction insurance, and then became very active in the lending area as a consultant to lenders. Pretty much all with the same company, believe it or not. I had a different assignment every few years, but I've spent the last 24 years basically focused on finance in various forms. And now this contract-based finance we've been doing for about 6 years now. And it's really taken off. And we think, again, it's a very valuable tool for contractors. So that's a little bit about my background. And Janet, if you want to advance the slide, we'll just get right into it. You know, I think you had some exposure yesterday to the project packet checklist, which is something that we need in order to put together a picture of your company and ultimately come up with a structure that would address your funding needs. It focuses on 3 areas. First off, background and organizational information. You know, we have a standard form of contractors questionnaire. We do have some specific forms that are common to Carolina Small Business Development that would go along with that questionnaire process. We would ask that you put together resumes on your key personnel. And that way we can essentially get a handle on your background and your organizational capabilities, and the types of projects essentially that you feel like you're well geared to undertake. Also, if you have any established website information, we'll typically just go ahead and look for that. But if you had brochures or other supporting information that you think might be helpful in describing your company, we're very appreciative to receive all of that. We look at financial information from a historic standpoint. And then as we go through today, we'll show you what we're looking for on a projected standpoint in terms of your financial situation. So as I mentioned earlier, there are CSBDF loan applications specifically to the financial portion of the underwriting process. We do require a personal financial statement on you as a closely held. Most of our borrowers are either sole proprietors or partnerships or closely held corporations. And so, but we do require a personal financial statement on all owners that have in excess of 20% ownership in the company. Okay. What I'm going to actually go through with you today is a sample balance sheet and a profit and loss, and also a work in process and a cash flow projection. But just to kind of introduce the balance sheet and profit and loss, and I don't know, Brian, whether you and Melanie are well comfortable with your balance sheet, how to utilize your balance sheet in terms of a management tool, your P&L, same thing. I'll kind of start with the basics. The balance sheet and the profit and loss statement is essentially what we refer to as a snapshot in time. It basically tells you what your available working capital and profitability looks like at a point in time, typically month to month, quarter to quarter, year end to year end. Okay. So in addition to your company balance sheet and P&L, and we don't have that, I don't believe, here on the check on this portion of the checklist, we would ask for current tax returns, maybe the last 3 years tax returns if they're available on your company. Okay. But the balance sheet, Janet, if you'll go ahead and click on that, we have a sample balance sheet that I'll run through quickly. This may be very familiar to you. The balance sheet here we have is just basically a sample. And in looking at the balance sheet, what we'll focus on today is just a very simple look at what we we'll look at when we're looking at your financial position. We look at your total current assets, which are typically comprised of your immediate cash position, your accounts receivable. Will probably ask for an aging on your accounts receivable. But on an as-given basis or as presented basis, this sample contracting company has total current assets of $162,103. That would be comprised of $22,000 of cash. That $22,000 of cash is really what you've got in order to cover your bills on a day-to-day basis as a component of your working capital. And of course, your accounts receivable, depending on their turnover, are also certainly a current asset and represent liquidity that's available to handle what would be your short-term liabilities. So this contractor has total current assets listed on their balance sheet of $162,103, and $22,000 of that is available cash. Now, if you scroll down a little bit there, that's perfect, Janet. Total assets for this contractor, though, we can't forget that this contractor has office equipment. They have vehicles that they carry the value of on their balance sheet. So we call those are essentially fixed assets. So in addition to the liquid assets that the contractor has, they have fixed assets, value for those fixed assets of $118,297. So the total asset position of this contractor is $280,401. Now I'll stop real quickly here and just ask, is this, would you have questions about this, Melanie or Brian? Is this familiar ground to you? So I won't be too basic here.
It's instructive. I had a balance sheet done before we had an accountant that we were using, but as it turns out, they weren't that great. So we're looking for a new accountant. And some of the things look familiar, but other things were not included, which doesn't surprise me, like, fixed assets and things like that, equipment. That would have been valuable had it been on the balance sheet that she prepared for us. So it's good to know, because you don't know what you don't know. But obviously there were some things that were lacking in what she was doing for us.
Yeah, a lot of times an opening balance sheet, if you're just really new in business, will really only show your cash in bank, maybe a fixed asset or two, maybe a limited amount of liabilities that you might have. But it's cash in bank, and the value of your company is typically that, as on an opening balance sheet. I'll digress for a second here and also say that this balance sheet and profit and loss that I'm sharing with you is on a simple accrual basis. That's a fancy way of saying that you've got not only your cash position, as I mentioned before, but you've got accrued accounts receivable, receivables that you're going to be receiving, and accrued liabilities. And the difference between a cash basis financial statement and an accrual basis financial statement is that the cash basis financial statement really doesn't provide you with what we think is an adequate management tool for your company. So when we work with our potential borrowers and just the folks who are enrolled in our program overall, what we try to do is to direct them to work with their accounting professionals to get their financials set up on a minimum of an accrual basis. And as we go through the presentation today, I'll talk a little bit about what is the real important or the best form of financial reporting that you can have as a management tool, and that would be percentage of completion accounting, which is fairly unique to contractors. So this is an accrual basis statement because it includes accounts receivable, and as I'll point out down here, accounts payable, okay? And again, just picking up where I left off, total assets here are $280,401. Now, if you scroll down a little bit further, you can see that the current liabilities that are listed for this contractor, which would be those accrual accounts that are due within the next 12 months, that would be accounts payable for materials, equipment rentals, whatever it might be, okay? Looks like what this contractor is paying they've got a personal income tax liability, and they've got union benefits payable as a current liability as well. So total current liabilities for this contractor is $66,408. And that's for the accounting period that is depicted here, which is July 31st of, I think, 2024. All right. By the way, this report is essentially a cumulative report from January 1 through July 31st. So this is where on this particular day and time, the contractor's current assets sit versus their current liabilities. So the working capital for this contractor would essentially be calculated based upon current assets less current liabilities, or something in the area of the middle $90,000 range. So the good news is you've got working capital available to you of $90,000, and depending on the rollover of your accounts receivable, that could be limited to what you've got in terms of cash in bank, or as those receivables are collected, that obviously supplements your working capital position. So working capital as given would be 90 some odd $1,000, the difference between current assets and current liabilities. But from a management standpoint, you're looking at this and saying, okay, what am I going to have to pay for out of the available cash that I have right now? And you can see that there are some current liabilities there, credit card liabilities of $9,800. And in total, that's going to become due and payable probably within the next 30 days. So that's probably going to really hit the cash account hard. So the total liabilities that this contractor is showing on his balance sheet then is $175,708. That's a combination of the short-term current liabilities and then long-term liabilities on those fixed assets that we mentioned earlier. In this case, vehicles, okay? So balance sheets have to balance. So you've got total current assets of what was it, $280,000, yep, and current and total liabilities of $175,000. Let's see whether or not the balance sheet balances. If you'll scroll down, Janet, you've got the equity position of the company. So total assets less total liabilities, okay, would equal the equity in the company that the contractor has, the retained earnings, the values, if you will, of the company. Now, I won't focus on the structure of the equity there, but to only focus on the fact that net income is listed for the period. For this particular period of time, January 1 through July 31st, this contractor is showing a little bit of a loss there, okay? That's not unusual. We would assume that this is a 7 months financial statement, and you're going to see losses in 1 month, maybe a nice gain in another month during the course of the year. But when we go and focus on the P&L, I'll point out some things that should give you as a manager of your financial position, or understanding what your financial position is, some comfort that your company is on the right track, even though through 7 months you're showing a small loss. Again, that's can be very common. So focus on that number of a negative 19,521.65, and I'll show you where that connects next to the profit and loss report. So the balance sheet, when someone asks you for a financial statement, you want to give them not just your profit and loss, your P&L, you want to give them both your balance sheet and your P&L, and because that tells a complete picture, again, of what your financial position is in any at any point in time, in a day and time, okay? So this contractor between January and July has generated $139,264 in total sales. Now, as you know, those sales essentially get hit by accumulated direct costs, cost of goods sold, if you will, on projects in the field, okay? And that would be your labor, your equipment, your material. It would be, and all of the burden on your labor, whether it be just the base wage rate, the cost of your workers' insurance, the cost of fringe benefits, any other payroll-related costs would essentially represent the burden on your direct labor or wages, okay? So you've got also small tools. This contractor has listed that they've purchased small tools for specific projects. That becomes a direct cost here as opposed to just an allocated cost from overhead, okay? So this contractor is basically telling us that they've got total income of $139,264, and they're showing a total cost of goods sold of $67,083. Their gross profit margin is $72,180. Okay, now that's a very, very healthy gross profit margin for a contractor. It's a very, very close to 50% there. We don't see a lot of that in the marketplace. This contractor happens to operate as a prime, and they're a highly specialized contractor. Know a little bit about their background. Subcontractors are going to show a lower gross profit margin because of the pressures associated with trying to get work with prime contractors and being competitive and securing that work. But that gross profit margin is a major management tool for you, understanding where you're at in terms of how you're doing in the field. That $19,000 loss that we talked about a little bit earlier is interesting, but to know where you're at in relationship to managing your direct job costs in relationship to your sales on the year is really a key indicator of how well you're doing. So contractors who manage their costs in the field, make momentary adjustments in project delivery, do what it is they can, make sure that they're essentially documenting their job costs on a daily, weekly basis so that this all flows up to your P&L. It's very important. And this is where Robert Lowry comes in handy from a technical assistance standpoint, because Robert is if he didn't make the point yesterday, he's a past master at helping you with effective job cost reporting. So gross profit, very, very important key component of managing your financial picture. Now, before I go down to the bottom line here, does anybody have any questions about the P&L? Does this all seem clear to you?
It looks pretty clear. My question is, and
Yeah.
this goes both for the balance sheet and the P&L, how often do you recommend we have these done?
Well, look, I think by the 15th or the end of the following month, you would want to be able to look at your balance sheet and your P&L from an internal standpoint. How did I do last month? Okay. I know it takes a little time to close the books, but I'm going to talk about what you can do short of actually running these on a month-to-month basis in terms of tracking your work in progress or process that will give you a good management tool there. Okay. And I'll do that just a little bit later in the presentation. Now, your surety bond underwriters are going to want to typically see an interim 6-month financial statement on you, okay? They're going to obviously want to see your year ends. They may make it as a condition to providing a bond for you that you provide them with quarterly statements accompanied by a schedule of work in process, okay? So again, I'll talk to you about why that's an important management tool. But again, I know I've said it so many times today, but the balance sheet and the P&L as a snapshot in time is a rearward-looking document. It tells you what you did, how you did up to this point, okay? What you want to be able to focus on is not only how well you did up to this point, but what is the outlook for me in terms of the contracts that I have on hand, okay? So I'll get back to that in a few minutes here. Now, if we scroll on down here, Janet, you've got your gross profit was approximately $72,000. You've got overhead costs. Let's go, just scroll up just a little bit for me there. Okay. You've got overhead, okay, that is comprised of various expenses, okay, over the course of the accounting period. In this case, they've got employee benefits and other insurance costs mixed into their non-direct job costs there. I've got to think that there should be an allocation on that labor burden I mentioned earlier. Properly burdened labor budget will include an allocation of workers' compensation and other insurance expenses, okay? But they've got general business expenses, education and training, entertainment, so on and so forth. And then the overall cost of their general insurance for the company down below. Janet, if you'll scroll down just a little bit there. Yeah, total insurance. You've got legal and accounting as part of your overhead. And then you've got meals and travel typically. There we are, office expenses, so on and so forth, okay? So the total expenses that this contractor has that would be allocated to their overhead, which would be separate from their direct job costs, okay, is $52,339. So they've got a net operating income on what was it, $139,000 of sales of $19,841. That's a pretty thin operating income position, but it could be corrected over the course of the year by additional volume. And because their net operating income at this point in time is $19,841, if you take into account other expenses that the contractor has, if you'll scroll down just a little bit there, Janet, for me. Yeah, okay. You've got other expenses tied to their vehicles and depreciation, okay, of $39,000, okay? And so that $19,521 that we showed as a negative net income on the balance sheet, that's their net income for the period. They lost a little bit of money for the period there. But again, this is an interim financial statement. We would always take a look at your year end, your most previous year end, and try to do as best we can a projection on where you're going to finish the year in terms of anticipated volume. And then make a judgment call on whether or not at that point in time, it looks as though whether or not you're going to be profitable. Okay. So the balance sheet and the P&L tie together in terms of that accrued net income, either positive or negative. And if you recall, this contractor had a retained earnings position of about $104,000, and he has a working capital position, if you include accounts receivable that are current, okay, and not, over 90 or 120 days old, somewhere in the area of 90 some odd $1,000 of available working capital. Okay, so any questions on the profit and loss report? And I would invite Mark Royster, you're a past master at this as well. Am I missing anything in terms of an introduction to all of this?
No, I appreciate what you shared, and nothing else that I would add.
Okay, very good. Well, thank you. All right, Janet, let's take a look-see at the work in progress, okay? Now, work in progress reporting has really taken the forefront in terms of how contractors, successful contractors in particular, manage their companies on a day-to-day or a week-to-week basis. I mentioned earlier, good solid standards of practice for daily job cost reporting, weekly job cost reporting. This all flows up to your work in progress reporting, okay? And we've developed a spreadsheet here that is formulaic. And we take our potential borrowers or anybody who's in our technical assistance program and work with them on how to put this schedule of work in progress together. And by the way, we're not forms happy. If a contractor comes to us and has a good working knowledge of their balance sheet and their P&L and has their own version of work in progress, we can work with that. And we can also work with their own version of cash flow projecting if they're that far along in terms of their business acumen, okay? But just to show you how this spreadsheet works, I'm going to use a real simple example here. Janet, let's call this job number 1, just for the heck of it here, okay? In that column C, there, the first column on the spreadsheet, you're going to list the contract value of each one of the jobs that you have signed contracts for, okay? And so in the first column there, on line 7, let's say we've got a contract for $100,000. I'm going to use all round numbers here so that I can do the math. So we got a contract value of $100,000 that shows up as $100,000 estimated profit because we haven't entered the costs on that project, okay? So the estimated cost on this contract, let's say you mark up the project by 25% and you end up with a margin calculation of 20%. So let's say your estimated contract cost is $80,000. You plug that number. So you can see there in column E, number 3 there, that the expected profit on the project, estimated profit going in, is $20,000 or 20%. Okay. Now, as you roll along in the project, let's see you get a field directive that for a change order that you then get approved, okay, for $10,000. So your change order is $10,000. Now your contract, your revised contract value is $110,000, okay? And your contract costs, let's just say you bid the same margin on that change order that you had on your original estimate. And by the way, this is going to be slightly misleading because when you get in and really get down to the brass tacks and reading your contracts, very often change order markup or margin is limited to a certain percentage. It may not be what you have going in. You don't have to disclose your markup or margin to a potential buyer of your construction services up front. You're going to have a sold price, in this case, of $100,000. They don't really know what your margin is, but on change orders, they very well state in your contract, any change order can only be marked up or you can only generate a margin on it of 15%. But to keep things simple here, let's say you've got a total contract cost now of $88,000. Okay, our original cost was 80, and we've got a $10,000 change order at 20% margin. Okay, so the revised gross profit, their column J, number 8, is $22,000 on the project. Again, your revised gross profit is at 20%. Okay, now let's say you have billed, okay, on this project 50% of the costs on the project, or 50% of the value. Let's say you've billed $55,000, Janet, or let's put that out in column 15 there. Yeah. There you go. Then it should calculate, I think. Okay, you've billed $55,000. Okay, actually go ahead and put in the actual cost. You've billed 50% on the project. And so go ahead and put that in there. Your actual costs would be $44,000. Okay, you can see there that your earned revenue is 50% of the value of the contract, okay? Your actual costs are 50% of your actual costs, or $44,000. The gross profit that you've earned to date is $11,000. And again, that billing is there at $55,000, okay? And that would be carried, that would essentially be recognized as $55,000 of earned revenue on the project, okay? At a gross profit of $11,000. So what you do in filling this all out, if you'll scroll down just a little bit for me, Janet, you can see how this reconciles, okay? Revenue billings to date would be $55,000. That would find its way into your profit and loss report, okay? Revenue earned to date is $55,000 and gross profit to date is $11,000. So that's just a little handy reconciliation there that ties to the spreadsheet. So what you would do, if you'll go back to the left, Janet, and back up to the top, you would list all of your contracts. Now, I would also mention to you that if you have a contract that you list there, it's a new contract, okay, and change orders have accumulated in the pre-construction phase on the job, you would always want to make that first column your contract price to include any approved change orders at the point in time that you're starting, because you just want to really track those change orders vis-a-vis your work in progress as the project is commencing.
Hey, John.
Yes.
Hey, I just wanted to interject real quick. Couple things here. I mean, this work and this whip here, excuse me, that we're doing, that John's going through. I mean, it can be used for a number of tools. As you guys know, when we talked about go and no go with projects, this is a great tool for you to use to say, hey, if I can add on another job, or should I go after one? So filling this out correctly, it helps you to determine, where your load is, where's your backlog, and can you add on? So having this accurate at all times helps you with those business decisions when opportunities arise. And it also can tell you if you're billing or overbilling too for certain jobs as well. So this thing tells you a lot about your performance.
There's no question about
Yeah.
it. And Robert, that what is also very important about it, along the lines of what you're describing, is, Janet, if you'll scroll down just a little bit so we can see the bottom line there. Okay, Barrett, perfect. Okay. When a surety bond underwriter or a lender asks you what your contract backlog is, okay, you can say to them, well, my signed contract backlog is that $100,000 in column 1 there, okay? But what I think you're really interested in, you say this to your surety bond underwriter or your lender, is what my cost to complete backlog is, which ties directly to what Robert was just saying. You're going to do a no-go analysis based upon your available working capital as it relates to your ability to fund the costs on the job. So this contractor essentially has a estimated costs of $80,000 on their signed contracts that they're going to have to fund a portion of in advance of getting paid. Okay. So you're looking at, on a cost to cost basis right now, being 50% done, the cost to cost ratio on this project is essentially 50%. And do I have enough available working capital at a point in time to prosecute this work? If I add another project without a loan or any other available working capital, do I have enough to fund this thing based upon not only the schedule of the jobs that I'm showing here, okay, but also my contract terms for when I'm going to get paid. Okay. So when we go through the cash flow projection, I'll try to pull all of this together for you. Okay. Do you have any questions about the work in process? And by the way, again, we train on this. We don't just throw this form out and say, hey, fill it out. We work on it with you, try to make sure it's accurate. Okay, so oh yeah, go ahead.
I'm sorry. With the work in progress and some of these other forms, you mentioned you help us with it. So coming to the table, do we need to already have one of these, or is this something that you can help us to develop if we don't have one already?
You know what we'll do when we get acquainted with you, and actually our contractor development managers will flag us during the assessment process. They'll ask a question. Hey, do you have an example of a balance sheet and a P&L that we can look at? I mean, do you have financial reporting in place? If you don't, then we work with you from a technical assistance standpoint and maybe any accounting professional helping you line up an accounting professional. Okay. Same thing with work in progress. If you were asked for a sample of work in process reporting, can you provide us a sample so we can take a look at it and we can determine, how well established you are in that area. Okay. So when Janet and I are alerted by our CDMs, we have an idea as to where you're at in terms of your basic financial reporting, balance sheet, P&L, work in process, whether or not you have experience doing a cash flow projection. Also, pay applications, really important because, we're talking about a contract here and you don't want to get messed up in the pay application process because you don't complete an AIA 702 or 703 or the equivalent, okay, in the proper manner and get your pay app kicked back to you, okay? So we determine that up front, and then we work with you on what we call a targeted technical assistance basis to make sure that you're good in all those areas. And of course, if we ask you, if asked, could you provide a copy of your standard form of job cost reporting, okay, daily or weekly? That's something that if you don't have it in place, we would ask Robert to step in and work with you on to get set up. And there are other aspects of the estimating process that we won't go into here, but Robert can also work with you in terms of properly developing your general conditions and all other direct costs associated with the work that you do. Okay. All right.
I have a quick question,
Sure,
if that's
sure.
okay.
Yeah.
My apologies. So my business is more focused on the post-construction cleaning side.
Uh-huh.
So what I really want to know is all of these forms and stuff that you guys are utilizing.
Uh-huh.
Are I able to use these same forms? I know my pay apps are different. It's like a G703, I think it is. A
Sure,
G7.
yeah.
Yeah. So I do know in regards to the pay apps, I'm
Sure.
familiar with that portion
Yeah.
of it. But for these, am I able to still utilize these same forms? And in that regard, if I'm using these forms, when I plug in, my specifications, is it still going to do the same thing, or
Yeah.
would I have to kind of create my own?
No, it's totally applicable. We have contractors that actually use this for their on other what I would call general conditions type contracts. I mean, your site cleanup, okay? We have contractors that are using it for site security services, for dust suppression, for utility hookup, for traffic control, whatever it might be. Little subtleties, okay, in how those contracts are set up, but we can work with you to make this a valuable management tool for you, regardless of what area of contracting you're involved with.
Okay, awesome.
And
Thank you so much.
even if you're cost plus, by the way, okay?
Yeah.
Time and material cost plus, lump sum hard bid. We'll work with you on each one of those areas to make sure that you get the exposure to the proper management tools.
Yeah, and Jasmine, it's great that you're using the G702, 703, because as I mentioned yesterday, that's the industry standard for billing. So
Yep.
if you're already accustomed to that, that's great. We just make sure
Oh,
you get
yeah,
your
definitely.
waivers and all that to go with it. You're golden.
Yeah,
Okay, awesome.
absolutely.
All right, thank you guys. I appreciate that.
You betcha. Okay. All right, moving right along, Janet. I think we're going to look at cash flow. Yeah. Oh, before we jump on that, okay, so I mentioned to you that we asked for 3 bins of information: background and organizational, financial information, okay? Now we're talking about information that is specific to either the type of project you want to bid in the future, okay, or what you're actually involved with. If you've already bid and are waiting for an award on a project, we're going to ask you for a specific application and project fact sheet on that specific job. Included with that probably would be more of a narrative form of a description of the project at hand. Of course, along with a copy of the contract, which we list a little further down here in the breakdown. But a copy of your contract, a project estimate. Now, this could be just the conditions detail on your direct job costs to include general conditions, your labor, your materials, your equipment expense, your GCs, any direct job costs that you've allocated to the project, to include the fully burdened labor, as I mentioned earlier, with your base wages, your fringes, insurance that's applicable to your employees, and any other wage or labor-related expenses that should be part of the burden on your project. And by the way, we can work with you in making sure that your standards of practice around burdening your wage rates is proper. And we've got a template that we can work with you on to share with you on that, okay? So what we do is we take your contract and the scope of work that you're doing and your contract terms for payment, and we sort of triangulate that, if you will, to use a term, between your project schedule, the time that the project is going to be performed over, okay, and your project estimate. We triangulate those three things in order to come up with a cash flow projection, okay? So if you'll click on that link there. Now, I know this looks like a whole bunch of numbers, but I'm going to try to make it very simple here for you. And this is, by the way, if you're adept at doing a cash flow projection, we're very willing to take what you've got and see if it meets what it is we need in order to underwrite and effectively package a loan for our funding partners at CSBDF. In this particular example, in the upper left-hand quadrant there, where it says cash flow projection, we've got a base contract of $500,000 there on line 3, okay? Now, we've built this thing so that we can add, during the course of construction, change orders that you may be asked for and get approved. So we would include approved change orders in that column D there, should they arise. But to keep it simple, we're just sticking with the original contract value here. That contract value is $500,000, and your cost of goods sold are then listed there below that. You've got $200,000 labor budget there on line 4. You've got $150,000 material budget. This is all hypothetical. And your general conditions amount to about 10% of the project value, or $50,000. Now, I'll explain other direct job costs when we get a little further along here. But the direct cost subtotal for this contractor on this project is $411,669. And that leaves over about 17.7% in gross profit. Not quite that example that I mentioned earlier, 20% gross profit, but that's fairly typical for contractors that we work with. The primes have a little higher gross profit, subs have a little lower. So anywhere from 15 to 20% is where we see our subcontractors these days. That means you've got a budget for overhead and profit, okay, of about, if you combine that 8.8 there, you've got somewhere in the area of 17% available to you in terms of covering your overhead and profit. Now, these numbers are all based upon the numbers that you give us. It's not something that we just assign to the picture. So if you take that basic breakdown and you scroll down in the cash flow projection, these are all tied together by formula. That labor budget there on line 28 is recorded as $200,000, okay, or 40% of the contract value. Now, for simplicity's sake here, the overall schedule of this project is 9 months, but we all know that based upon the activities that you're performing in the field, you may have costs associated with your labor budget that vary from month to month. It's not going to be just a straight line, $22,222 for labor, and similarly for materials, $16,000 or $5,500 for your general conditions. But what we want to do is keep this illustration as simple as we can. So we just straight line all of those expenses as they would be evenly allocated over the construction schedule. Okay. So if you scroll back up a little bit there, Janet, let's remove that $125,000, which would be potential loan. Okay. So in the case of this contractor, we're saying, okay, let's just look at this from a zero available working capital standpoint. Now, one of the reasons why we ask for a balance sheet and a P&L and a schedule of work in progress, okay, is in order to determine what your beginning cash position is on any given project. The contractor we just looked at had about a $94,000 beginning cash position, $22,000 of which was comprised of cash in bank. But for simplicity's sake, standpoint here, in order to prove a point to some degree, we're going to basically say that this contractor has zero available working capital, or very, very minimal available working capital. So if you scroll down, Janet, in month 1, we've projected that their direct job cost subtotal is going to be about $44,000. And if you allocate overhead costs to that for that first month, their total disbursements or total cash requirements in month 1 is going to be $51,501, and they've got no cash. They've got no available working capital. So what does that do? It says that you've got an ending cash position in that first month that's $51,501. That becomes an insurmountable obstacle to taking this contract on, that go, no-go scenario that Robert was talking about, okay? You've got a deficit working capital position going into month 2 of $51,501. And because you're not going to get paid, you're going to bill in January, you're going to turn that G703, 702 form in January, okay? But you're not going to see any income on this project probably until March, based upon our experience in working with contractors. You may have a 30-day progress payment provision in your contract, maybe some retention, maybe not. We didn't include retention here just to keep things simple, okay? But let's say your first billing is for $54,000, which constitutes your direct costs of $51,501 and an allocated or a weighted average cost of value, if you will, of your profit at that point in time, that $44,000 of profit. So your billing is at $54,646, okay? So going into then month 3, lo and behold, your deficit really is only $46,000 when you start. But if you scroll down, Janet, and you accumulate your costs over the course of that month, you finish the month at a deficit of $95,558, okay? Again, even having received a payment, you're upside down. Okay, so that's how ending cash position becomes your beginning cash position for the next month. And that's how this thing works horizontally across the board. Now, what we basically say is, okay, in the CFAP program, we have the availability of $250,000 of working capital funding for you, okay? So we begin to look at what your cash requirements are going to be. And I can tell just by looking at this that you're going to need probably somewhere between $100,000 and $150,000, okay? So let's just plug in on line 19, $125,000, Janet. That would be the value of your loan, the amount you would be borrowing, okay? And lo and behold, you go into month 2 before you've gotten paid with a positive cash position, available cash to you, of $73,499. Good enough to get you into the month of March with a positive cash position after expenses or disbursements of $23,233. You collect a progress payment in March of $54,000, and your available cash going into the expense cycle for the month of March now is $77,880. And you can see, if you look at line 17 there, because of the impact of that loan on line 19, column G, you're in a positive cash flow position all throughout the project. Now, again, this doesn't take into account variations in your cash requirements based upon project schedule. Everyone knows that your labor and your material costs are going to vary from month to month, okay? So the art in all of this is when we do a preliminary cash flow, work on it with you, then we go back and we say, okay, really, let's now take a look at the actual critical path and see where you're going to be deployed and where you're going to have additional strain on your available cash based upon how many workers you're deploying on the project and so on and so forth. And I would imagine for our was it Jasmine? Or I don't see it in the Yes, Jasmine. See, for the type of work that you perform, it's probably pretty constant over the course of construction. You've got so many hours of cleanup per night. You've got a cost associated. Do you have to typically provide the dumpsters and all that kind of stuff? Or is that?
We have before, but we've had contracts where we didn't need, they had already had them there and they allowed
Yeah.
us to use the ones that were there.
Yeah. See, so your potential costs on a day-to-day basis, unless there's some unusual cleanup or there's something associated with a final clean versus just a day-to-day clean, those costs are probably going to be pretty constant as you move across, okay, in terms of how they're distributed. But for a contractor in the sub-trades that is doing mechanical, electrical, site prep, whatever it is, okay, you're going to have, based upon the ebb and flow of the project schedule, you're going to have more or fewer costs in any given month, okay? So you can see in the case of this contractor, they borrow $125,000 and you get out to the month of December where we're fully billed on the project at that point in time to include the, well, it looks to me like contract price and any retention there, okay? And you've got $169,240 available to you, okay, to take down your loan. So you pay off your loan at that point in time, $125,000. And lo and behold, you've got $44,166 of profit on the project, which is what we had projected, okay? And it's nice when it turns out that way. Sometimes it's a little bit better. We had a contractor the other day that did a project for $273,000, and he generated approaching $100,000 of profit on the thing. It was just a very, but he had bid as a prime and did a lot of the work himself, okay, physical labor on it. But that contract value there on line 18, the billings that is depicted there equals 500,000 there in column V. If you go out there, Janet, there we are. There's our contract value fully billed. And if you scroll down, there's a little accrual. Well, okay, yeah, go out all the way to the bottom. Your ending cash position is that 44,166 or 8.8%. Now, what I want to impress upon you is this. Okay, that's interesting. That's great. But I'm gonna have a cost of this loan, okay, of $11,669. Man, that seems like a lot of money. All right. But that profit already takes into account that 44,166 already takes into account the cost of the debt. Okay. Now, if we take the cost of your debt, and this is the way we really would like for you to look at it, and I'm not trying to sell CFAP, don't get me wrong. Your interest rate on these loans is going to be actually higher, somewhere in the area of 8. What do we have? What do we use for a calculation here, Janet, on this example?
8.75.
8.75%, which is a couple of basis points over the prime rate, okay? The cost of this loan is only 2.3% as it relates to the value of the project, $500,000. Now, would you invest 2.3% in a project that would generate for you $44,000 of income that you couldn't bid based upon your current cash position? In other words, we try to get you to that next level. If your current cash resources aren't adequate to bid this project, okay, then there's a way for you to get there by using other people's money, okay? And so when we calculate there on line 23 and 24, the origination fee on the loan, it's a $125,000 loan. Your origination fee, which is taken from loan proceeds, it does not come out of your pocket up front, okay? And the cost of the interest on the loan is $10,419 over that 9-month term, okay? Again, not coming out of your pocket. It's going to come out of the amount of money that we loan you. I mean, ultimately, it comes out of your pocket, but you don't have to fund it up front. You don't have to pay the interest up front. And by the way, if we hit a point in time during the course of the project where there's enough money to retire all or a portion of the loan, that will just reduce the cost of the debt. But that gets worked into the costs down below, Janet, if you'll go down where we enter that in the left-hand quadrant there. Yeah, we enter those interest expense and origination fee costs of 11,669. That finds its way up to line 7, your direct costs, okay? So your net income on the project is 44,166 or 8.8%. And quite frankly, a lot of our contractors, they'll manage their overhead allocation. They'll manage the project during the course of construction and very often improve those margins, okay? Yeah, margins.
Yeah.
Yeah.
And that's, that 8% right there. It's about typical for your, that, the net.
Yeah.
And as we talked about in our classes, the ways to improve your profit and everything is by finish the job early. Is there's cost savings, buyouts from your suppliers. So there's ways to increase your profit, but that's about the standard right there, what John just mentioned.
And the other thing about it is that when you look at that number, the 8.8% times 2, okay, really translates to about 17.7%, okay? That's a pretty good rate of return from a gross profit standpoint. And as Robert's saying, if you're able to control your overhead, and by the way, your overhead is ongoing, and we understand that. So during the course of construction, if the project seems to be going well and our projected costs are being maintained, we'll pay you a portion of your earned overhead to date. Let's say we get 20% or 30% or 50% through the project and everything is holding. We'll do a calculation on your projected overhead budget and distribute that money to you so you have a little bit more in the kitty to fund other projects outside of this arrangement. But we're always being very, very careful that we have enough money there to pay this loan off with contract proceeds. Okay. And for your comfort, okay, when you're looking at, okay, I'm going to borrow $125,000. That seems like a lot of money, but I'm well suited to do this $500,000 job. You basically say, hey, look, I've got almost a 5-to-1 coverage ratio on this. My lender is looking at contract proceeds as the primary source of debt repayment here. That's what I'm looking at as a business person, okay? So that should give me a level of comfort that there's going to be plenty of money there if the project goes as expected or reasonably well, okay, to cover the repayment of this loan. Okay, so debt service coverage ratio is something that we'll talk to you about during the course of analyzing all of this. So I know this is a lot of numbers and a lot of jargon and explanation and all that kind of stuff, and I don't want to give everybody a headache today, but I hope that you see a tidbit of value in all of this, and it's something that we need to do for CSBDF in order to present your loan, okay, in the proper light. And they look to us to do this cash flow projection and lay it out for them, okay? Now, the way we lay this out, any questions about this? And I'll share with you the way we lay it out for them. No questions, okay. All right, so then, we will present, we obviously share this spreadsheet with CSBDF, okay? But next slide, Janet, I think is a simple summary of what we see here, okay? The following slide, there you go, bingo, okay. This is just a color bar chart illustration of how your loan looks if we were to map it on a bar chart. The red lines down below the median there, okay, represent what would have been your cash shortfall. You remember we had a cash shortfall in month 1 of around 51,000. We had a cash shortfall in month 3, I should say, month 2 and month 3 of around $100,000. Without a loan, that represents an insurmountable obstacle for you to be able to assign a go to that no-go process that Robert was talking about. But with a loan, which is represented by the blue lines there, we provide you with $125,000 of working capital to take the project on. And as progress payments come in, and granted, this is all straight lined, and when this final rendering would look very different as we look at the critical path on your project, that Primavera spreadsheet we typically are looking at, okay, and we'll map what your cash requirements are and what your income would be as we move along. But the green lines on the graph represent that steady $54,000 or $55,000 of income that we would be seeing, so that your loan is then repaid out there somewhere in the area would be 9 months into the year. Or no, it was 11 months into the year, I think was where we had the repayment provision, 11 to 12 months. So we summarize our discussion with CSBDF with a bar chart illustration, but we do go over the cash flow projection with them in great detail. Any questions about that? All right, we'll go to the next slide then. And this is, I think, where Robert jumps in and talks lessons learned and next steps and that sort of thing.
Yeah, so Jen and I kind of will tag team on this part here, though.
Okay.
So, but before we get into that, I know that, like John said, that was a lot of information there, probably an overload, but you can always schedule some one-on-one coaching with Janet and John to go into it more. And a lot of these templates we have for you guys to utilize too. As you know, with some templates within my classes, you already have access to them. So, so there's nothing really new. If you have not taken my bidding and estimating or job start or contract award and management. So, all this kind of ties together of education, training, the support, and helping you to be able to, move forward with your company and grow. So, it's really no cost to you, but your time and effort into your business and sitting in these workshops and academies and stuff, because there's a lot of good information that you don't get on an everyday basis, as you're growing your business. So with that being said, I'm going to go through some of these bullets here. So understanding your contract and how to negotiate, that is really what we're talking about. When you bid these jobs, read the contract. On public works, you should be able to get a copy of the prime contract, because there is pass-throughs that might not be in the contract that you see a sample of when you're bidding. So if you don't have theirs, ask for a copy of it, because it's public information. Making sure that, this is a good fit. When John was talking about change orders, there are times in your contract that it's going to dictate what your general conditions and your fee can be. I've seen many contracts where it's like, hey, you can only mark up your proposal by 12% and 9% is your fee. Then they'll go into change orders is if you are self-performant, they will tell you it's 15%. But if you're managing somebody, you can only mark it up 5%. So all those numbers, if you don't, catch that could be a issue there. And also the payment terms is like, is it net 45, 60? It's a good thing to ask is like, do you hold up the pay app to the owner? Because not everybody's pay app to the general contractor is good. We've seen times where you think, I've submitted on the 20th of the month, and so it'll be 45 days, you're getting paid. But technically, it could be 90 because of some delays. And then when they're getting it to the owner might kick it back. So there's a lot of those variables you have to be aware of when you're doing these cash flow about, hey, when do you think you are getting paid? And that has been where a lot of contractors run into trouble. There's a quick pay they might have, but is that something you want to utilize? Because that's a cost to you, but it gets you money into your pocket, where you're not, strapped for there. So there's a lot of stuff in terms and conditions is knowing what you can ask for. It's like, hey, I'm not too good with this. I don't like this. Can we negotiate it? If the hiring person or the GC is like, hey, you got to do what's here and I'm not going to negotiate, is that a good contractor to work with our owner? Majority of the time is no. Some of the other lessons learned is the impact of your payment terms. I just kind of talked about that. You think it's going to be 45 or 15 days and it's triple the amount. And they always say, well, I haven't been paid by the owner, so I can't pay you. But John, and I always get this right. That used to be the case now, but after a certain time, they have to pay you, right, John?
Well, yeah, I mean,
Yeah.
pay when paid is technically not allowed, okay? But
Mhm.
it is a marketplace reality. Pay if paid is definitely against the law. You are due to get paid. If the prime doesn't get paid and you have an approved pay application that has not been satisfied, then you're going to move on to that next bullet point, which Robert will illuminate to
Yeah.
you, okay?
Yeah. These
Yeah.
are where your liens come in, because you remember we talked about that in the job start notice to contract, notice to subcontract to the owners. If you haven't filed that, then it's hard for you to do these stop payment notices because you don't have the rights to do it. So, if you haven't been paid and it's like, and they keep delaying it, then do that stop payment. And then what's going to happen? That goes to the owner, and then all poo-poo breaks loose because the owner doesn't want liens on their property and stuff. But it's your right because you don't have your money to keep moving with your company there. So understanding those, has been a lessons learned and people didn't know about, but now you guys do. Non-compliance. There's if you're on a union or whatever it is, even there's forms that need to be filled out. If it's like a multi-month job, there could be reports that needs to be sent to the owner or general contractor. And if you don't submit them, then they can withhold your payment because you're non-compliant. Also, with your insurance, it needs to be current at all times while you're on the job because that's a non-compliance. Of like, hey, you're not compliant, so they're going to withhold. Labor wages, it's not too big in California. I mean, in North Carolina, but there is some disputes on, you know, you could be paying your guys $17 an hour. Your competitor might be paying $12 an hour. So there's a lot of discrepancy in your wages out there. What is the market? Understanding, adding your benefits on that. But that's one of those disadvantages in the state when it's not union or prevailing wages. The labor rates are all over the place down there. So how do you get a competitive labor rate? That's the $1 million question. And as over time, you'll start to see, hey, I see what everybody else is doing out there, because of these public works, you don't see all of the numbers because it's just a dollar, bottom line, but you can kind of start to compare your numbers to others, say, hey, wait a minute, let me play around and see where, how I can get my rates to the right amount.
And the primes will give you feedback if you're in a subcondition. Well, of course,
Yeah.
they're always trying to beat you down, but
Yeah.
but I've seen some very constructive conversation,
Mhm.
especially if the subcontractor isn't awarded, they've gone back and said, "Hey, where did I break down in all of this?"
Mhm.
And they'll open up to you and they'll say, "Well, I'm not going to give you the low bidder's number per se, but I'm going to tell you were off by X in the following areas. And so you need to get your pencil sharp on all of that." Okay. And hopefully you're dealing with a prime that will be honest with you in that situation. But I think that as Robert is saying, from a standpoint of lessons learned, we kind of keep an inventory of these things. And so we'll be talking to you about all of this as we get you pre-qualified. And to answer Jasmine's question directly, Jasmine, you do not have, once you have gone through the process of assessment and work plan, or your work plan, if you have one, is established, you're clear to contact Janet and I directly, and we don't sit in some ivory tower. And we rely on our contractor development managers many times to say, hey, I've got somebody here, they're going to need XYZ. Will you reach out to them? And we do that. So the door is wide open
Yeah.
throughout the process. And the earlier we start, the better. Oh my gosh. Yeah.
Yeah, we talked about that. And
Okay.
and if you guys are in one of my class and you want to, I can always reach out to Janet and let the CDM know at the same time, because I'm more in contact with you guys out there frequently. So, feel free to reach out to me too if you can't get in contact with your CDM or Janet or John. We try not to go to John first. But, it's mainly myself and Janet and your CDM, and then we'll bring John in at the appropriate time. But it's all about helping here.
Oh, and on yesterday's webinar, there's a question from Tim. I wants access to it.
Yeah, there should be a link that has a recording from yesterday. We'll make sure that Jason get everything out to you guys too, and even these templates and stuff that we were showing. So he will be doing, I guess, a SharePoint folder and getting everything so you guys can access that SharePoint folder to download all these, the presentation, the recordings, and these templates and stuff. So, even with that, when you're ready to start, and you want to start dabbling in some of those, like I've always tell you, save a copy of these templates and, have a working one that you can play around to see how these numbers manipulate and stuff. Because, there are formulas in there and you mess up a formula, you didn't know it, you messed it up. So that's why we always try to highlight stuff in yellow. It's like, here, this is where you add numbers, just to coach you until you get comfortable with your admin stuff. So, those are some of the lessons learned. So, some of the next steps is, the onboarding package. That was that checklist that Janet was showing up previously, some slides back. She will send that over to you, and then, it's on you to start sending her the information, so that she can start putting your packet together. Then as we know that there can be some coaching that you need during the onboarding as you're sending over, the checklist items. And that is where myself or John or anyone gets in and start help coaching you, because we want you to be ready. If you don't have a CPA that's in the construction industry, we do have resources that are the CPAs that are in construction, because not all accountants can do construction industry. And people find that out late in the game. It's like, whoa, this person doesn't know construction. So just be aware of that. And then the financial statements, if you don't have them, we have resources and working with everybody else, others to help. Janet has been great of helping you guys with that, and John. So, we do have a team that can help you with that. And pre-qualification, like Janet said, it takes at least 30 days, but it's on you to get her and us, the team, the documentation. Because if you start and you stop, then we can't go any further. And the numbers got to be right, because we can't expedite something when the numbers are incomplete and we're going back. It's like, how did you get this number? And you don't know. So that slows down, especially if you're already on a job and you need assistance, because it's, it's 8-9 month job and you're struggling because of delays. So, John and will do a forensic, a reverse here, and they've done it before.
Sure.
Yeah. So, but we prefer not to go that route because it's a lot of stress on you and everybody else trying to help. And then you could be dead in the water with no money because we're still trying to go through the process. And like say, if you do have opportunities that is coming up soon that is a good fit for you, get with us so we can get you started now. So Janet and John, is anything I missed out on that?
I think you've covered it well, and we don't stand on ceremony. You have questions, you contact us. We set up numerous meetings to go through work in progress. We set up numerous meetings to go through cash flow projecting and have discussions with you about your job cost breakdown. Make sure we thoroughly understand how you have bid the project so that our projections are accurate. CSBDF, Carolina Small Business, is looking for us to really package these loans in as accurate a fashion as we possibly can. And, we approach each one of these arrangements from the get-go with yes in mind. And we really try to just present a loan to Carolina that we know will be approved. Okay, we don't go in and say, well, you've just spent 3, 4, 5, 6 weeks of hard work with us and we're not sure. No, we'll know before we ever go to loan committee whether or not the committee is going to approve the deal. Okay. Part of that also, and if I didn't mention it earlier, we do introduce you to Carolina Small Business during the process. Essentially, whoever your key point of contact would be, either Mark or Reggie Jones, and begin to develop a relationship there. But we do package these loans, we structure them, and we make a recommendation to them. And then I'm at least there through the loan committee process. Okay, so it's really designed to be, we've piloted this early on. We've been at it 6 years now. It's a fairly new form of finance for small businesses, but many of our borrowers have moved on to commercial lines of credit because they've built up their retained earnings, they've built up their business acumen. They can walk into a commercial lender and say, okay, here's my business plan, okay, which we can help you with, by the way, as well. And here's a cash flow projection. What do you think? And they'll say, well, I'd really like to look at your financials. I'd like to know more about you, okay? But if you walk into a commercial lender and you say, gee, I need a loan for what I think is maybe 125,000, maybe 200, and they'll basically say, well, you need to then accumulate all of this and come back and see me, okay? That's really not the way you want to approach a commercial lender. You want to be able to come in once you get that meeting and basically say, this is who I am, this is what my firm looks like, this is what the outlook is, and here's my cash flow projection. Is there a potential of doing business with you? Okay. So we try to position you just for that, okay, down the road.
Yeah. One thing I don't think we mentioned yesterday or today is this CFAP loan is technically for one project at a time. But however, if you've got multiple, John and Janet, they can be wizards and package multiple projects in one if need be. But, John, if you want to kind of like elaborate a little bit on that, just trying to keep track.
Well, the principle behind all of that is that, look, as a contractor, you're wanting to accumulate a backlog of work. You got contract A, B, and C. They may overlap. They may be completely concurrent, or they may come and fall like dominoes, okay? The program is designed for $250,000 per loan, per contract. That contract gets finished, the loan gets paid down, we go to the next one. And we can do loan 1, loan 2, loan 3, as many as we need to, okay? But as a contractor, you know that your cash position today is really only improved by how quickly you can get cash in the door and how you can build your retained earnings. So you're going to try to generate a backlog of contracts. as many as you can handle at one time, okay? So we've come up with a way of essentially covering up 3, 4, even sometimes 5 contracts under one CFAP loan. Now, it's not realistic to think that you could cash flow 5 jobs, depending on their size, of course, with only $250,000 of capacity. So in those cases, what we've had to do is say, okay, we've got this contractor. He's got what did we say the contract value was? That was $500,000 on that job. He's got another one for $250,000 and another one for $100,000, and they somewhat overlap. That's a combined contract value, okay, of somewhere approaching, $800,000, okay? $250,000 is a little more than 10%. It's not quite 20% of that value, okay? The overall $800,000 should be adequate, especially if the contracts just overlap, they don't run concurrently. So we put together, we structure the debt and see whether or not it can stand the stress of your payment terms and the ups and downs of what your cash requirements are going to be on 3 jobs as opposed to just 1, or 2 jobs as opposed to 1, whatever the case may be. And we present that case. So, and we realize that in order for you to meet your goals and get your company to the next level, it's all about developing that backlog and rolling over. And we call it the velocity and contribution of cash is how you build your company. So we're aware of that, and we look for opportunities to help structure those types of deals as well.
Okay, thank you, John.
You bet.
So any questions?
Yes, the last thing that John said, he said it's the velocity
Oh,
and the what of cash?
contribution. Your
Thank you.
cash contribution, simply defined, is that progress payment that comes in. Okay, that's a contribution to cash on a month-to-month basis. Okay.
Thank you.
And the way we grow your business is by increasing the velocity of those contributions. So if we can cover 3 jobs at once, all of a sudden the velocity, you got money coming in on job A, B, C, right?
Mhm.
Yeah. Understanding that all of them could be stringing you out 60 days. Okay. But
Exactly.
it's that velocity that makes the difference. Okay.
Yes, I've had some experience in the past in a different world, in a different industry, of managing contracts where you have revenue coming in and one source is government based
Yeah.
income, and it's always good to have something that is not government funded to
Yes.
fill the gap when you're
Yeah.
waiting. Your contract says it could be up to 45 days, and then all of a sudden they decide, oh, it's going to be 90, and you
Yeah.
can't do anything about that. It's
No.
like
No.
this, you just wait. And so it's always good to have something else,
Well, it is. And here's the thing that's interesting about this, Melanie. You're already doing a cash flow projection in your head. We're just basically showing you how you can put it down in black and white. It starts with that paycheck that you got as a teenager. This is how much I have coming in this week. This is what my cash requirements are going to be. Sometimes you kept a checkbook, maybe not, I don't know. But my point is, cash flow projecting is just that simple building blocks. What do I have? What's my beginning cash? What are my cash requirements? What's my ending cash going to be before I get some more money in the door?
Yes.
Yep.
Yes, I kept a checkbook, and I was one of those people who perseverated over missing pennies.
Yeah,
Literally.
there you go. Very
It
good.
took
I
me
remember
many
that.
years. It took me many years to learn how to write that off. God, I was
Okay.
young and dumb, but I cared.
Sure. Well, it's a good basis. Brian, are you good to go? Do you have any questions for us today, or Jasmine? Anybody? Anything else?
No, I'm good. I really appreciate it.
Oh, well, it's a pleasure. And
Yeah, no, I don't have any questions as of now, but yeah, this information is invaluable. So thank you guys so much. I appreciate it.
It's a pleasure, and we look forward to working with each and every one of you, and we'll just stand by for the opportunity to do that, okay?
Thank you. This was
Thank you
great.
very
It's
much.
very encouraging, actually. It sort of gives you the, helps you take a breath, you know, like, okay, I can take another step. I
Great.
kind of know what the next step looks like.
Glad to hear it. Glad to hear it. Thank you so much. All right. Well, I'm going to sign off here.
We'll turn it over to Jason at this point. Thank you, John and
Thank
Janet.
you now.
Yeah.
Thanks so much.
Yes, thank you everyone for presenting today. If everyone could take a quick minute of your time to complete our survey for today. I'll put the link in the chat as well. I also want to thank you for joining us this evening. I know it's a Thursday night, and I really appreciate it. And I appreciate John left, Janet and Robert for presenting as well. So thank you for the great information. I definitely learned a lot, and I hope you all had a valuable lesson. Like Robert said earlier, I will be combining yesterday's webinar video with today's recording, and I'll be sending that out to you as well, along with the PDF presentation. So yeah, if you all have any other questions, please feel free to reach out to us or the CDMs that has been assigned to you. And I hope you all have a great rest of your evening.
Thanks,
Thanks,
Jason.
Janet.
Y'all
too.
as well.
Thank you.
Bye.
All right, now take care, guys.
All right, thanks.